this is the landscape that we're dealing with, and the appropriate rate is lower than it used to be.
Yeah, of course, we are not talking about the central bank's preferred gauge of inflation. We should point that out for the record. Nonetheless, it's the issue that they've been dealing with for some time, regardless of the gauge they use to some extent, that, we're not seeing enough of an increase in prices to kind of satisfy their goals of just, kind of keeping the economy going. We've look across to Japan, we see the effects of deflation over time. That's certainly something they want to avoid. To the extent that it's popping up here and there, it's got to be a reason for concern.
We might have another unicorn in our midst. DoorDash raises $100 million at nearly a $13 billion valuation. And I know from Twitter, Lisa's not necessarily buying this valuation.
I didn't say anything on Twitter. I just highlighted that it now has a nearly $13 billion valuation.
So maybe that was Shearer.
And to be clear, Shearer
Shearer
injected the snark on top of it. But it already was a unicorn. Still, it comes at a time when food delivery services are of questionable valuation. The fact that they can raise $100 million, given this kind of valuation, does this just raise more questions about how much money are in private markets in order to fuel some of these blitz scaling efforts that we have seen versus real valuation? What's the exit strategy here?
Yeah, and let's bear in mind that after Grubhub came out with its latest quarter results, shares fell 43% in a day. So you got to wonder how you put $13 billion on DoorDash when you look at Grubhub, which has been around a lot longer. It's only worth a quarter of that, according to investors.
Guess who was one of its first and biggest investors?
SoftBank?
SoftBank. There you go.
That's a whole other story, the effect of SoftBank on businesses. I think, the New York Times had that story? Somebody did.
Well, basically that they've inflated valuations to a high degree.
Well, and it talks about, the story talks about the effect on the people that work at the companies whose valuations have been inflated.
That was actually, I believe, there was a Wall Street Journal story about Rajiv Misra, formerly of Deutsche Bank, who's leading up the SoftBank effort. Right now, Dave Wilson, Bloomberg Stocks Editor, thank you so much. Right now, let's head toward 99 Studios in Washington, D.C. Nathan Hager there with world and national headlines. Nathan.
Lisa, the House Intelligence Committee is gaveling in 2 weeks of public impeachment hearings, beginning this morning with senior diplomats who had key roles in Ukraine policy. Let's go live to Capitol Hill and check in with Bloomberg's Irv Chapman. Irv.
Nathan, today's witnesses are William Taylor, the acting U.S. ambassador to Ukraine, and George Kemp, Deputy Assistant Secretary of State in the European and Eurasian Bureau. Chairman Adam Schiff will hand over part of the Democrats' first 45 minutes of questioning to Daniel Goldman, a former federal prosecutor. Moments ago, the chairman gavelled to order and began an opening statement.
In 2014, Russia invaded the United States ally, Ukraine, to reverse that nation's embrace of the West and to fulfill Vladimir Putin's desire to rebuild a Russian empire.
Now, the committee's ranking Republican Devin Nunes will share the next 45 minutes of questioning with committee lawyer Steve Castor. More diplomats will appear in 3 days of hearings next week, outlining long-standing U.S. policy to strengthen Ukraine's governance and offer support against Russian pressure, as the chairman was just saying. Nathan?
All right, that's Bloomberg's Irv Chapman with us from Capitol Hill covering these proceedings this morning. And as the hearings go on, President Trump will host Turkish President Recep Tayyip Erdogan at the White House, the NATO allies' first meeting since Turkey's incursion into northeastern Syria. A joint news conference later this afternoon could give the president his own chance to weigh in on the impeachment proceedings. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries.
Pickets.
From the business community, has it become normal?
Tariffs.
That is also below what the market is looking for.
Trade wars.
Give us an idea of how things are likely to evolve.
You don't want to turn away for a second. Don't worry, we're watching too.
Chief Asia economist joining us from our studios in Hong Kong.
Bloomberg Daybreak Asia.
Trade war got to be the top of mind there.
Tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the lingo.
Jelly. Jelly adjective. Jelly is a shorter, better way to say jealous. As in, Chloe, I am like so jelly of your unicorn phone case.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org, brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
Join us in New York City on November 21st as Bloomberg Pursuits convenes the second annual The Year Ahead Luxury. Speakers include Jennifer Hyman, CEO Rent the Runway, Alessandro Bogliolo, CEO Tiffany & Company, Robert A.M. Stern, renowned architect. Supporting sponsor, Diamond Producers Association. Participating sponsor, St. Regis Hotels and Resorts. For more information, go to BloombergLive.com/TYA Luxury. Invitation code RADIO.
Hi, we're the Goo Goo Dolls. We're fortunate that our daughters have what they need to grow and learn. But that isn't the case for nearly 13 million kids in the U.S. that struggle with hunger.
Childhood hunger is a heartbreaking reality that Feeding America is working to change. Each year, the Feeding America network of food banks rescues billions of pounds of good food that would have gone to waste and provides it to families and children in need.
You can help kids in need in your community by visiting feedingamerica.org.
Brought to you by Feeding America and the Ad Council.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on Ice. I'm a natural. Didn't have to hold on to anything or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
'Tis the season to be hunched over your laptop, not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
At Ring, we've reinvented the doorbell. So no matter where you are or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today. Far wing, elevates, triple bucket.
The war of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
the
it.
Sideline, the man fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet and scores us down.
The top of the Big 12 is at stake. Reigning champion Oklahoma travels to Waco, Texas to take on the surprising undefeated Baylor Bears. The action kicks off this Saturday at 7:30 p.m. Eastern. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and TikTok on Twitter. This is a Bloomberg Business Flash.
Stocks tread water near all-time highs as investors wait for news today, news from the Fed and more. Inflation data today did little to alter the view that the Federal Reserve is done easing and in no rush to hike as prices continue to rise at a tepid pace. We check the numbers every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is down 0.1%, down 3. The Dow is little change, down 12. And the NASDAQ is down 0.2%, down 14. The 10-year is up 17.30 seconds with a yield of 1.87%. West Texas Intermediate crude oil is up 0.9% at 57.32 a barrel, while COMEX gold is up 0.7% at 14.6380 an ounce. The dollar yen, 108.75. The euro is $1.10.12, and the British pound, $1.28.28. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, as we've been reporting all morning, at the top of the hour, we'll have Fed Chairman Jay Powell speaking in front of Congress today. We already got his comments released earlier this morning, saying essentially that the Fed policy is in a good place right now, but there are risks out there. To get a preview of what we might hear from Fed Chairman Powell, we welcome Diane Swank, Grant Thornton, Chief Economist. Diane, thanks so much for joining us here. You've got to look at some of the comments from Fed Chairman Powell. What do you think we might hear from him later this morning?
Well, the key issue is, one, they're on the sidelines until they see a major change in the outlook for growth. And that could be anything from an escalation of the trade war with China to some kind of escalation in geopolitical tensions like what's going on in Hong Kong, depending on how that plays out. That could have an economic impact as well, and that's something that they're watching closely. It was interesting that he talked so much about fiscal policy in his prepared remarks, warning that, we're going to need that fiscal space down the road because the Fed doesn't have a lot of tools to counter a recession should we get there. And this is something that other Fed chairmen have constantly sort of gone on. He's joined the bandwagon of other Fed chairmen on this, talking about fiscal policy, the need for sustainable fiscal policy, and also the need to provide help when the economy does falter. This is something we only saw in the early stages in the post-crisis period. In fact, then fiscal policy became a hurdle for the economy as all the burden was shifted onto the shoulders of the Federal Reserve. And they know the dangers of that. They've already experienced the dangers of that. And they're worried also about the unintended consequences of too low of rates for too long. And that's something he mentioned as well in his prepared remarks. And that's corporate debt. He's concerned about the lofty levels of debt we're now taking on, and that may be a threat to the economy when we have a downturn, making any downturn worse than it otherwise would be.
The headline, though, is Jay Powell makes no news. He's successful, right? I mean, that's going to be the headline today.
The artful dodger, yes.
The artful dodger.
Dodger at work, yes.
Okay, that's.
In Washington, would you want to make news today if you're the Fed chairman? I don't think so.
And you know what? He has competition. He has competition, so he's in a good spot right now. I am wondering, though, about the CPI data that we got today, showing that without energy and food, it actually is decelerating. How concerning is that to you?
Well, I think it's really hard as the unevenness of inflation for the Federal Reserve. What we're seeing is, you've got a lot of inflation in medical care costs and medical services. That's up over 5% from a year ago now, where you've got a deceleration in many other categories. There was a big drop in apparel prices. That's been something that's ongoing. We also saw the reversal in new and used car prices. And this is something that, the Fed, for the moment, has sort of sidelined a bit and said, hey, we were worried about inflation being too low. We're going to wait on the lags on these 3 rate cuts we saw and see if that pushes inflation up, gets a little more heat in the economy. They're certainly willing to take that in terms of wages, and if that translates into more inflation, that would be welcome news for the Federal Reserve. That said, this ongoing stickiness in the low inflation environment, although it's high for some people, those people who are on fixed incomes and have to pay for medical costs more as a larger share of their budget, they're really screaming right now. On the other side of it, we're not getting the wage gains you really want for workers. workers, and that's what the Fed is really striving for.
So, Diane, we've seen really over the last year develop a scenario where the consumer increasingly is carrying this economy as we see weakness in manufacturing sector, business investment. How long do you think that trend can continue?
Well, something's got to give. Either business sector has to come back a bit and shore up the foundation of growth going forward, so we get some productivity gains, we get some movement up in that, or consumers are going to take it on the chin if businesses pull back more and have the second shoe to drop, and that is actual cuts in hiring. And that's something we're really watching closely, because there really was a very important shift that went on this summer and in this year, and that was a slowdown in payroll growth, but also the overall job openings are down 4 months in a row from a year ago. Still at lofty levels, that's great. Firms are reporting it's easier to hire than it was earlier in the cycle all of a sudden. That loosening of the labor market is the exact opposite that we want this late at the stage in the business cycle. We want to see a little more heat and less fragility in the business cycle in terms of the labor market. And that's what so far has been really holding consumers up, is the fact the labor market is still there. Not as many wage gains and raises as they'd like, but frankly, low prices at the pump compared to a year ago are helping them out.
Huge sentiment shift in the market right now from bearish to bullish, with a feeling that the disinflation, the deflationary trade is overdone. Do you think that there is data to support that?
I think the disinflationary trade, it's not clear that that's overdone yet. We've yet to see the effects of tariffs on consumer products. That's still in the pipeline. But I think more importantly, though, is we've got a global situation that's still weak. And the market seems to trade on, yes or no answers. Is the global economy slowing further? At the moment, no. But it looks like it's plateauing at a bottom or bottoming out in some areas. But we don't know if there's another step down or if it's going to step up. My own concerns is that we're very limited in how much stimulus we can provide, and that China remains a real wild card, not only with the trade agreement, but just growth itself in China. It continues to weaken and surprise on the downside, and that's something that seems to be discounted in financial markets. This isn't like the Japan trade war in the 1980s. China is the second largest economy in the world, with tentacles in almost every other economy in the world, so the ripple effects may not be through what we worry about in financial markets directly, but indirectly through growth.
Diane Swonk, thank you so much for being with us. Diane Swonk is Grant Thornton chief economist. And it is an interesting day when it comes to the economic front, because you do have CPI. It was a mixed bag. Yep. Headline number came in faster than expected, but that was largely due to food, energy. And if you take a look at it, healthcare costs are increasing, rents are increasing. Yep. But if you strip out some of those basic essentials, you are seeing lagging price increases, indicating perhaps that the Fed is going to stay where they are for a while yet. Coming up, we're going to be talking about the other thing happening in Washington, D.C. today, the impeachment hearings. This is Bloomberg Markets.
This is a Bloomberg Market Minute. Investors aren't seeing a lot of reason to rally today, but they're not stepping too far back from records either. The Dow is down 17, the Nasdaq 16, the S&P 3. Inflation data did little to alter investor views. The Federal Reserve is through for now with cutting interest rates and is ready to keep rates steady so long as inflation is weak. The Labor Department reported a weak gain in core inflation last month relative to October of last year. Rents fell. Fed Chair Jay Powell is backing up that view in his prepared remarks before he appears in front of members of Congress today. He says the Fed's policy is appropriate as long as the economy stays on track. Nike is done with its direct sale experiment on Amazon. It had started a pilot program in which it acted as a wholesaler a couple of years ago, selling its shoes and clothing directly on Amazon. But some brands don't like Amazon because of fakes and unauthorized sellers undercutting prices. I'm Joan Doniger, Bloomberg Radio.
To buy your home, you became a house hunting ace, learned about loans, scoured neighborhoods, and asked the right questions. Now you're queen of your castle. If you manage that, you can get your retirement plan on track. Visiting aceyourretirement.org can help. With 401k tips and smart saving strategies, you'll feel empowered to own your retirement like you own your home. Go to aceyourretirement.org, because when it comes to clearing financial hurdles, you're an ace. Brought to you by AARP and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Some people find love par chance. Me, I found love in my Citroën dealership. I looked at new Citroën C5 Aircross SUV with advanced comfort seats, and boom! They say, Emmanuel, you also get 0% finance over 48 months. I say, I love it. Visit your local Citroën dealership and find love too. New Citroën C5 Aircross SUV, the most comfortable SUV.
Citroën. Citroën UK Limited is a credit broker, not a lender. Conditional sale. Terms, eligibility criteria and return conditions apply. A guarantee may be required. PSA Finance UK Limited.
It's one small step for man, one giant shop. Sorry, 2 giant shops a month at 10% off with the new Tesco Club Card Plus. Oh, and double data from Tesco Mobile. All for $7.99 every month.
New Tesco Club Card Plus. Value you can't stop talking about. Subscribe online today. £200 max spend per shop, in-store spend only, club card app required, exclusions apply, double data only on pay monthly, home from home destinations. First payment payable up front, subject to status, see online for details.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
What if, instead of browsing the World Wide Web, we were all browsing GopherNet?
Gopher is easy to navigate and easy to browse.
Because in the early 90s,
Gopher was taking off faster.
Until they made one crucial mistake.
At that point, Gopher traffic on internet dropped off.
Find out why open source won the battle for the internet next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed... When you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we will preview the speech from Fed Chairman Jay Powell that starts at the top of the hour. Plus, we'll get an update on the impeachment hearings, which are taking place this morning in Washington, D.C. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg?
Paul, stocks did slip early, now fluctuating after President Donald Trump threatened to substantially raise tariffs if China did not strike a trade deal with the U.S. and on escalating tensions in Hong Kong. Mark Vintner tells Wells Fargo tells Bloomberg he still thinks a trade deal with China will come.
That'll be one that has various stages to it. The first one will essentially be an agreement in principle of what we're going to agree on. But I don't know what the timing is. It's very hard to say. And the Hong Kong mess is really an unknown in all of this.
An example, Canada Goose Holdings falls after saying that unrested Hong Kong hurt its business there and forecasting wholesale revenue will decline this quarter. Canada Goose is down 8.5%. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is down 0.1%, down 3. The Dow's little change, down 11, and the Nasdaq's down 0.1%, down 10. The 10-year is up 18.30 seconds. The yield 1.87%. West Texas Intermediate crude is up 0.6% at 57.16 a barrel. While COMEX gold's up 0.75% at 14.6470 an ounce. The dollar yen stands at 108.72. The euro $1.10.05, and the British pound $1.28.31. That is a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, coming up in about a half an hour, we're going to hear from Jay Powell testifying in front of Congress. But currently, there are other testimonies going on, in particular, the first public impeachment hearings in front of the House of Representatives. Ari Natter has been following them. He's a Bloomberg News reporter covering all things regulatory in Washington, D.C. Ari joining us from the nation's capital. Ari, what are you looking for from these hearings that you think will be the most notable takeaway?
Right. Well, today's historic impeachment hearings give the American people their first chance to see what's been playing out until now behind closed doors and decide for themselves whether Donald Trump committed impeachable offenses in his actions towards Ukraine. House Democrats are hoping to use the hearings to bring to life thousands of pages of closed-door testimony and make the case that Trump abused his office and should be impeached for pressuring Ukraine to investigate Biden, his political rival, and withholding aid until that happened.
So, Ari, what is the fundamental Republican strategy here as these hearings begin? Is it simply to say it was no big deal?
Right. So these hearings did give Republicans their first high-profile chance to defend the president. I think their defense is multi-pronged. On one hand, they're arguing that Trump has done nothing wrong in calling for the investigations, and that his objective was to root out corruption in Ukraine, rather than to bolster his own political fortunes. They're also saying, if he did anything, it's not an impeachable offense. So I think we'll hear that, and already we've heard Republicans call this a smear campaign orchestrated by Democrats and the quote-unquote corrupt media. So there's a kind of a window into the Republican defense.
Markets don't care. That seems to be the takeaway when there are developments in the impeachment hearings. Who are these for? Is anyone paying attention outside of the Beltway?
That's a good question. I believe this hearing is going to be televised across the nation. I mean, it's really a historic event. This is only the third time in history that impeachment hearings have been conducted. But to your point, even if the House does vote to impeach Trump, that begins a Senate trial, and Republicans control the Senate. They're not expected to convict him. So, this could be political theater, but again, if the House impeaches Trump and the Senate releases him, that'll make it a 2020 election issue, and I think that's part of the strategy here.
Ari, what do you think is a win here for the Democrats or those moving towards impeachment? Is it simply to just air all publicly everything that's kind of already been testified about?
Right. I think what they're trying to do is move public opinion. I mean, support for impeachment has grown, but stabilized. We've seen an NBC Wall Street Journal poll recently that found 49% favors Trump impeachment removal from office. A win for them would be to really move the needle to the point where, Senate Republicans don't have a choice or, actually, vote to impeach Trump.
What's the timeline here?
So Democrats in the House want to wrap this up by Christmas, which if they vote to impeach Trump, then that immediately kicks off a Senate trial, which would happen in 2020, an election year, which presents its own complications, considering that many of the Democratic senators are running for president and would presumably need to stop campaigning and come back to Washington, for impeachment.
So in a Senate hearing, what's the time frame for that? I can't remember the last time we've had one of those. We haven't gotten to the Senate hearing.
Right. So What I know is that if the House does vote to impeach Trump, then the Senate immediately begins a trial with the Chief Justice presiding, and Mitch McConnell has said he doubts that Trump will not be convicted.
Thank you so much for being with us. Ari Natter, covering all things regulatory in Washington, D.C. For us, coming to us from our Bloomberg 99.1 studios. Ari, thank you. It is interesting to see how much Washington is in the focus among certain groups. But, at this point, markets are not watching this. The next shoe to drop will be the 2020 elections. That's what markets are watching. I think you're right. And I think, as we look at it, the markets continue to be, really laser focused on trade, actually. And, a tweet here, a comment coming out of China there can move markets, and that seems to be the big issue here. Whereas impeachment, I think people kind of are just discounting kind of what Ari was mentioning, which is, potentially an impeachment in the House, but unlikely to move forward in the Senate. So it really just comes down to the election, as you mentioned. Meanwhile, in markets, even though you are seeing a little bit of a risk-off tone in equities, in credit, very much risk-on. You saw investment-grade credit spreads reach the lowest since March of last year overnight, which is interesting considering the fact that you're also seeing a rash of sales from investment-grade companies, and particularly the biggest sale of the year with AbbVie's sale yesterday. Yes, that was to finance their takeover. It just, to me, highlights how if credit is a leading indicator, it's saying game on amid all of the uncertainty. And yet I do have to wonder how much trade is sort of the boogeyman here, and if there's something larger at play underneath. Yeah, interesting. And we see the credit markets, as you mentioned, there's tremendous appetite for credit here. Even in the municipal market, when we talk to Joe Misek every week, he talks about the increasing demand for municipal paper out there. So as you suggested, the credit markets are saying, risk on here. And that's a marked change from maybe just a few weeks ago when the market, I think, was a little bit more cautious on just kind of risk in general. Yeah, although you are seeing some potholes with some select areas, whether it be energy and shale, or whether it be Intelsat, which are seeing its bonds fall out of bed today. Right now, let's head over to our 99.1 studios in Washington, D.C. Nathan Hager there with World and National Headlines. Nathan.
Yeah, I want to get you more on the public impeachment hearings just now getting underway before the House Intelligence Committee as opening statements continue in the bitterly partisan, divided panel. Bloomberg's Irv Chapman is with us live from Capitol Hill with the very latest. Irv.
Nathan, two senior U.S. diplomats are appearing before the committee, describing the efforts by President Trump to spark a Ukrainian investigation of corruption, defined as the role of Joe and Hunter Biden, and whether Ukraine, not Russia, interfered in the 2016 election. After opening statements by the chairman and ranking Republican made clear that any final vote would be along party lines, William Taylor, a former ambassador to Ukraine, who was asked to return last year when President Trump fired the ambassador, and George Kent, a longtime Ukrainian specialist at the State Department, were delayed in testifying because of parliamentary objections from the Republican side. After Chairman Adam Schiff reviewed the charges of the president's withholding military aid to Ukraine, unless that country's president did him a favor, ranking Republican Devin Nunes charged.
Anyone familiar with the Democrats' scorched earth war against President Trump would not be surprised to see all the typical signs that this is a carefully orchestrated media smear campaign.
And now the two diplomats have begun their opening statements, Nathan.
All right, that's Bloomberg's Irv Chapman, and Bloomberg Terminal customers can watch all the proceedings. Just check Live Go on the terminal. Global news, 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
In-depth analysis.
It's one small step for man, one giant shop. Sorry, 2 giant shops a month at 10% off with the new Tesco Club Card Plus. Oh, and double data from Tesco Mobile, all for $7.99 every month.
New Tesco Club Card Plus. Value you can't stop talking about. Subscribe online today. £200 max spend per shop, in-store spend only, club card app required, exclusions apply, double data only on pay monthly, home from home destinations. First payment payable up front, subject to status, see online for details.
At Ring, we've reinvented the doorbell. So no matter where you are, or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
At TUI, we can help you find the perfect getaway for two. We fly to over 70 destinations worldwide, so wherever you have in mind, we'll help you get there. Book now and choose from thousands of holidays under $399 per person and pay £0 deposit when paying with direct debit. Book online or in-store with one of our travel experts. At TUI, we cross the T's, dot the I's and put you in the middle. Offer available on selected holidays for a limited time and subject to availability. Booking T's and C's apply. At all protected.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
What if, instead of browsing the World Wide Web, we were all browsing GopherNet?
Gopher is easy to navigate and easy to browse.
Because in the early 90s...
Gopher was taking off faster.
Until they made one crucial mistake.
At that point, Gopher traffic on the internet dropped off.
Find out why open source won the battle for the internet next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet and scores us down.
The top of the Big 12 is at stake. Reigning champion Oklahoma travels to Waco, Texas to take on the surprising undefeated Baylor Bears. The action kicks off this Saturday at 7:30 p.m. Eastern. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
At home or on the go, stay up to date on the latest news and political trends with Fox's full lineup of shows. Plus, when news breaks, Fox has you covered with live updates and expert analysis on the biggest developing stories. Listen to Fox News Talk anytime on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and TikTok on Twitter. This is a Bloomberg Business Flash.
More records for stocks as they edge into the green after starting the day in the red. Investors early saw a few reasons to start buying stuff after a 5-week rally. The dollar and treasuries are up. We check the numbers every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is now little changed. The Dow Jones Industrial Average is little changed, up 10. And the NASDAQ is down 0.1%, down 6. The 10-year is up 19/32. The yield 1.86%. West Texas Intermediate Crude is up 0.8%, at 57.26 a barrel. And COMEX Gold's up 0.8% at 14.6540 an ounce. The dollar yen, 108.73. The euro, $1.1007. And the British pound, $1.2834. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Bloomberg Markets is brought to you by the Jewish Communal Fund. JCF's Donor Advised Fund is the smart choice to manage your philanthropy. Open a JCF fund now to lock in a 2019 tax deduction. Visit jcfny.org. Well, there's a really cool article on the terminal today that really caught my eye, the title in particular. The Fed is losing its grip on U.S. interest rates once again. I thought the Fed was doing a great job. Alex Harris covers all things FX and rates for Bloomberg News. What's going on here? I was about to give the big pat on the back to the Fed for getting this nice soft landing.
Well, I mean, here's the thing, so there's like the policy toolkit that the Fed works with to sort of keep the Fed funds rate within that band, which is right now 1.5% to 1.75%. But, part of the unintended consequence with, these liquidity injections, these repo operations, treasury bill purchases, is that it's helped push the Fed funds rate a bit lower than it might otherwise be. And so now, with the previous adjustments, when Fed funds was too close to the top of the range, well, now we're at a point where it's a little too close to the bottom of the range. So now people are wondering, well, if they were making adjustments to interest on excess reserves rate, which is one of their tools in the toolkit, when we're getting so close to the top, well, can we expect something similar in the bottom to ensure that Fed funds, doesn't risk breaching that bottom boundary and instead, stays?
Okay, hold on a second. So for people who don't necessarily count themselves as interest rate wonks, the larger takeaway here, as I listen to you, may be, again, going back to the repo issues and going back to this question, is the Fed's balance sheet too small considering how big the market for U.S. Treasuries has gotten?
It's a really good question, and it's whether or not there's enough liquidity. And, some people would say, no, there's no risk of that breach on the lower boundary because there's not enough liquidity back in the system. And I think Powell also brought this up at the very end of his written testimony that we'll hear shortly, is that, no, we're fine. We're working on getting our reserves back into the system. But, there's still liquidity. Too much liquidity is not the issue yet.
There is a question heading into year end. Are we going to see another repo market disruption akin to what we saw in September, given the fact that we haven't come up with a permanent solution yet?
I think we'll see some sort of disruption. I think that's being anticipated. Part of the reason is you have these regulatory factors at the end of the year, surcharges for the big banks, where repo, which can be punitive for the scoring, forces them to pull back. So we are going to get a pullback. Do I see repo at 10% again? Probably not, but definitely elevated. I think already year end is trading somewhere above 3%, which, relative to where repo is now on a daily basis, somewhere around 160. Yeah, that's quite a move.
I don't know what permanent facility they can put in place right now that would alleviate, some of these issues. I think there's little things that they can do to address it, mainly how, they treat the repo operations, because part of the issue is going to be okay, you have the repo operations and they stay with the dealers and that cash does not get out to the rest of the market, and it's the rest of the market that needs that funding. So, that's one of the reasons why we're going to have issues, and I think the Fed just philosophically doesn't know what they should be doing if they put a standing repo or a permanent repo facility in place quite yet.
Have we seen this repo problem before? I don't recall it being this long in duration.
No, the thing is that, the financial crisis was a completely different animal. Yeah. And so post-crisis, all these regulations went into place that sort of kept a lid on funding rates, essentially, so to avoid scenarios like this. But now I think you have an interesting intersection between, regulatory changes in the last decade, plus, shifting monetary policy and, QE, which we never had before. And I think that's creating some of these pressures. And that's why I think everyone's a little confused as to how to confront this and what tools we have at our disposal, because I don't necessarily think it's just monetary tools. I think, we have to look at this from a fiscal standpoint, a market structure standpoint. So there's a lot of interesting issues with this.
The incredible irony of banks having so much cash on their books that they can't put the cash back into the system, but they're forced to have that cash in the books in order to meet their sort of risk requirements. And Alex, you said this, that banks are going to be de-risking into year end.
Yeah.
How close are they to doing that? Because we're hearing they're de-risking, and that is part of the reason why you've seen volatility in some risky debt right now.
I think you're getting close. The other thing is someone had said it's not just going to be deleveraging, across repo. It's going to also be deleveraging some of their derivatives positions and unwinding those as well. So there is a risk you're going to see this. I think we're getting close. You figure, once we get nearer to Thanksgiving, you should start seeing some of this happen. Definitely December could be a little bit bumpier than people expect, because this isn't just going to be a last week of December kind of thing. They're going to start closing up shop, and pulling back sooner rather than later.
So there is no per se permanent solution for the Fed that we've seen at the short end of the curve in that repo market. Is the kind of the de facto solution just to kind of let the balance sheet grow a little bit?
I think that's what they're intending to do. Lori Logan, who's de facto head of the markets group right now at the New York Fed, she spoke, I believe it was last week. She addressed the primary dealer annual meeting. And, they seem to acknowledge that, look, we understand when there are pressures, we're going to be coming in. So, and they know that there are going to be times where reserves are going to shrink, and they're going to need to combat that by doing something more. Either it's more repo operations, more treasury bill buying. So they know that they need to, there's going to be times where it's offset and they're going to have to keep doing more. There's a lot of outstanding questions to this, though. And one of the things is, how long is this really going to go on? Because people are thinking this is going to go beyond the second quarter of 2020. And how do you contend with a treasury that has seasonal issues with treasury bills, where you actually get negative issuance in treasury bills? So you have to think about a scarcity risk now in 2020 as well. So, there's a lot of competing forces, and it seems like the more the Fed steps in, the more complicated things get for them. So it's going to be interesting to keep watching.
And I should just note that yields on treasuries right now heading lower after the disappointing CPI data. Alex, just real quickly here, 30 seconds. What may we hear from Fed Chair Jay Powell today in about 5 minutes about this issue in particular?
I don't think, he has a paragraph at the end, offer a word on it. We're trying to get back to ample reserves. We see it as a level somewhere where we were in early September. It'll be interesting to see what kind of questioning we get about this from the Joint Economic Committee. I think a lot of questions probably are going to center around regulation and what do you do from that standpoint to fix it? Because, you had Elizabeth Warren's letter to Steve Mnuchin, last month, who was saying, hey, don't use this as an excuse to roll back regs here. You know?
Right.
So I think this is going to be one of the big issues for them, and then we'll see what else they come up with.
We'll see what else they come up with. I have a feeling it probably will be less repo, more political in nature. Alex Harris, thank you so much for being with us. Alex is, of course, covering all things interest rates and bonds related for us at Bloomberg News. We are seeing right now 10-year Treasury yields at the lows of the session, 1.87% yield as we await Fed Chair Jay Powell's testimony in front of the Joint Economic Committee in about 3.5 minutes time. We're going to be hearing all about how he is happy with rates are now, but the risks seem skewed to the downside. This is Bloomberg Markets.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
At Asda this Christmas, treat them to a gift or two, or three, with 3 for 2 on a wide range of beauty and toiletry gift sets, from Dove, Lynx, Bayliss and Harding and many more. Asda, let's make Christmas extra special. Selected stores and lines subject to availability. Individual prices £1 to £20, cheapest item free.
It's one small step for man, one giant shop. Sorry, 2 giant shops a month at 10% off with the new Tesco Club Card Plus. Oh, and double data from Tesco Mobile, all for $7.99 every month.
New Tesco Club Card Plus. Value you can't stop talking about. Subscribe online today. £200 max spend per shop, in-store spend only, club card app required, exclusions apply, double data only on pay monthly, home from home destinations. First payment payable up front, subject to status, see online for details.
At Ring, we've reinvented the doorbell. So no matter where you are, or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
What if, instead of browsing the World Wide Web, we were all browsing GopherNet?
Gopher is easy to navigate and easy to browse.
Because in the early 90s,
Gopher was taking off faster.
Until they made one crucial mistake.
At that point, Gopher traffic on the internet dropped off.
Find out why open source won the battle for the internet next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
Of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Where's your views on the municipal bond landscape?
The market does not like uncertainty, does not react well to uncertainty.
There's a whole lot of optimism around the valuation of Uber.
What is Ford saying about the self-driving car?
Breaking market news and insight from Bloomberg experts.
Maybe we're getting hooked on debt and low interest rates.
The black hole called power could be a bigger black hole.
A toxic brew of slower revenue growth.
There is now this belief that Amazon maybe can do anything.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up, we're going to have the testimony of Fed Chairman Powell coming up later this hour. We'll preview that. Plus, we'll get an update on impeachment hearings that are taking place in Washington, D.C. But right now, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Interesting markets today, Paul. Stocks are fluctuating at or near record levels as investors hope for more news from the Fed. And news on a China trade deal is not as good as had been hoped. The International Energy Agency predicts global oil demand will hit a plateau around 2030 as the use of more efficient cars and electric vehicles ends an expansion that dominated the last 100 years. Pata Birol, IEA Executive Director, tells Bloomberg the peak demand for oil is coming. When is the big question?
If the governments take much stronger, clean, efficient technologies, push them much stronger, we may well see that the peak can happen earlier. But at the same time, if the policies of the governments do go in the other direction, we may see peak comes later.
West Texas Intermediate right now is up 0.7%. We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is little changed, just a toe in the green right now. Dow is little changed, up 9, and the NASDAQ is down about 0.1%, down 6. The 10-year is up 18.30 seconds. The yield 1.87%. West Texas Intermediate, as I said, is at 57.19 a barrel. COMEX Gold is up 0.9%, up 12. At 14.6670 an ounce. The dollar yen 108.73. The euro $1.1009, and the British pound $1.2839. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Lisa and Paul.
Thank you so much, Greg Jarrett. Let's get a check on what's going on with small caps. We've got our Dave Wilson here, Bloomberg Stocks editor. So what are we seeing there? Are we seeing the same kind of weakness?
Well, certainly a whole lot more than you're seeing with the larger companies at this point, Lisa. The Russell 2000 index is down 0.6%, and the S&P 500 is little changed at the moment. One of the Russell's steepest declines belongs to Intelsat, whose ticker is the letter I. The satellite network owner has lost about 23.5%. J.P. Morgan said Intelsat's push to sell wireless frequencies for 5G service has been muddied by a proposal for a public auction. Party City Holdco, ticker PRTY, has fallen more than 19%. Private equity firm Thomas H. Lee Partners distributed its 38% stake in the retailer to the firm's partners. Those shares can be sold after just 15 trading days. And Marker Therapeutics, ticker MRKR, has dropped about 21.5%. The drug developer disclosed that U.S. regulators ordered a halt to research on a leukemia treatment. Now, the Russell's biggest advance belongs to Cardlytics, ticker CDLX. The marketing data provider has risen 29.5% after reporting an unexpected third-quarter profit. Revenue beat the average analyst estimate in the Bloomberg survey. And Comscore, ticker SCOR, has gained about 18%. CEO William Livick disclosed that he bought $1 million of the media analysis company's shares last week. Chairman Brent Rosenthal also made a stock purchase totaling about $150,000.
Dave Wilson, before we let you go, I do want to get your view on the shale patch, because we've seen a bunch of pain there, even though we've seen a general rally both in stocks and bonds, and that pain continues with the IEA today coming out, as Greg Jarrett was saying earlier, saying that they expect peak oil to come within the next 11 years or so. What are we seeing there right now? Is there any kind of a sense of stabilization?
Well, I mean, you can say Chesapeake Energy is the most active stock. It's actually up today, which is saying something, but it is now a penny stock, which is indeed a commentary on what's been happening with oil and natural gas prices. I was taking a look at the futures on the Bloomberg terminal. The average selling price for natural gas, million British thermal units, the common measure there, down 17% from all of last year. Similar story with oil. You look at the benchmark West Texas Intermediate crude, down 12.5%, the average price from last year. So these falling energy prices, are definitely hurting, these smaller companies that borrowed a lot of money in order to be able to expand in the shale patch. And actually, I had Reuters reporting that Chesapeake may end up selling some of its shale assets to Comstock Resources, which may help explain why the shares are higher. So, but asset sales, of course, only go so far when you've got a market that is not going in your favor in terms of prices.
Yeah, that's interesting that Chesapeake stock down 66% this year, just looking at a kind of a relative value compared to its peers, and a lot of red, a lot of negative performance this year coming out of those names.
And from a debt side, you've seen a real underperformance in their high-yield debt. Just to give you a sense, North American oil and gas producers have about $93 billion of debt coming due by the end of 2023, according to Moody's.
Yeah, it's going to be a lot to get through, and big issues for these companies. It's going to be worth watching, if only to see how many cases you have where the bondholders end up with the company as opposed to the shareholders.
Bloomberg Stocks editor Dave Wilson, thanks so much. Let's go down and get to Washington, D.C. and get an update on the impeachment hearings with Nathan Hager. Nathan.
They've been going on for just about an hour before the House Intelligence Committee, Paul. Chairman Adam Schiff laying out the case that President Trump committed high crimes and misdemeanors by asking Ukraine's president for the favor of politically motivated investigations.
Our answer to these questions will affect not only the future of this presidency, but the future of the presidency itself, and what kind of conduct or misconduct the American people may come to expect from their commander-in-chief.
Ranking Republican on this panel, Devin Nunes, is calling this an impeachment process in search of a crime. Here's what Devin Nunes had to say.
Anyone familiar with the Democrats' scorched earth war against President Trump would not be surprised to see all the typical signs that this is a carefully orchestrated media smear campaign.
Now, the first witnesses in this first day of impeachment proceedings are Deputy Assistant Secretary of State George Kent and Acting Ukraine Ambassador William Taylor. Both say they were alarmed by efforts by President Trump's personal lawyer Rudy Giuliani to smear then U.S. Ambassador to Ukraine Marie Yovanovitch. Taylor also says that Giuliani and Acting White House Chief of Staff Mick Mulvaney were part of an informal Ukraine policy. Ahead of these hearings, House Speaker Nancy Pelosi offered her thoughts.
Very prayerful, thoughtful, and actually sad today that our country has to come to a place where the president doesn't understand that Article 2 does not say that he can do whatever he wants.
President Trump weighed in on Twitter before the hearings began, saying the Democrats have stacked the deck against him and Republicans by leaking everything out. He may have more to say at a joint news conference with Turkish President Recep Tayyip Erdogan later this afternoon. It's set for the 3 o'clock hour. You will hear it live here on Bloomberg Radio. But as the testimony was getting underway today, the Trump campaign already began trying to raise money on it. A tweet from the campaign says the hearings today are a total scam. It says, let's raise $3 million in 24 hours. That was according to a text message from the Trump campaign. And the Kremlin is drawing parallels between this impeachment proceeding and charges of Russian election interference. A spokesman for Russian President Vladimir Putin says Robert Mueller's investigation had little relation to reality. He says when it comes to impeachment, there are a lot of things far-fetched. Next week, there will be more hearings. Chairman Schiff says 8 more witnesses will appear, 4 of them on Tuesday, then following with 3 more Wednesday. And next Thursday, former National Security Council Senior Director Fiona Hill will testify. As for today's hearings, the bulk of the questioning will come from Intelligence Committee staff lawyers. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. In Washington, I'm Nathan Hager. This is Bloomberg.
Nathan Hager, thank you so much. From one hearing to another, we're going to be taking the Fed Chair Jay Powell testimony in front of the Joint Economic Committee in just moments. With us here to give us a sense of what to look for, a roadmap, is Carl Riccadonna, Chief U.S. Economist with Bloomberg Economics, and Vince Signorella, Global Macro Strategist for Bloomberg. Carl, I want to start with you. Based on the testimony that we've already gotten released, are you expecting anything particularly earth-shattering to come from today's testimony?
Well, this was Jay Powell's opportunity to grab the rudder and steer the boat in a different direction from what we've heard in recent Fed speak, which was a resounding chorus of three's a charm, we don't need to cut further in December. He did not choose to change the course and instead reiterated that message. So he really highlighted 3 key factors or drivers of the Fed's decision to go on this mini easing cycle, and it was basically slow global growth, sluggish global growth. Number 2 was trade tensions, and number 3 was inflation below their target. Those things haven't really gone away, so that kind of provides a template for what would motivate the Fed to act in the future, but certainly they haven't gotten worse. And in fact, if we look at the tariffs that have been passed over, the October tariffs were delayed, the December tariffs probably will get delayed if the Phase 1 deal goes through in trade negotiations, and that really does change the economic outlook and then obviates the need for additional Fed easing.
So, Vince, what what would the market view as an surprise moment today?
Well, as Carl said, and I agree with him on just about everything, that he is going to stand in the middle of the road. He will say data dependent. He could take two courses. He could say he's uncomfortable with the trade situation after Trump's comments last night, that he thinks that's still a major concern, which the markets would see as dovish, or flip to the other side, that he thinks the economy is doing so well that he thinks the data is going to improve markedly, where the market could interpret it as moving from what was sort of a mid-cycle adjustment to back on a hiking process. I don't think he's going to do either of those. I think he's very much going to stay middle of the road. Tensions have simmered, or moved to the back burner, rather. They've declined somewhat. But as Carl said, they were all there. Brexit's still an issue. Trade's still an issue.
Powell indicated, he said it would take a material reassessment of the outlook to really put the Fed back into action in either direction, right? And so that, he says, well, we're not on a preset course, but that material reassessment means the hurdle's high to really shift off of that current course. And to Vince's point, the development that would, lead traders to kind of look for some action here would be really a tweet from the White House saying trade talks aren't going good. Okay. Things are breaking down. Phase one's not happening. December tariffs are going to go into effect. Something of that nature then could be a real game changer for the Fed outlook.
So all things being equal, should we just see 2-year yields flat, basically, for the foreseeable future, Vince?
No, I don't think so. I think we're definitely seeing some green shoots in the economy. This fourth quarter is looking to be a bit more robust. Really good jobs numbers. The CPI numbers. Sans Energy were just a little bit hotter. And I think we could see yields higher going into the fourth quarter. Again, data dependent. We'll see what real average earnings produce in the next week or so. But in general, the Fed seems to be comfortable with the steeper curve, and that seems to be the way the market is moving things. So you could see 2-year yields on a flatter basis, but I think out on the curve, I think yields would go a little bit higher.
So it's interesting, Carl. It seems like just over the last several weeks, just the sentiment seems to have moved from maybe on the margin things are a little bit worse to maybe on the margin things are a little bit better. Do you think the economic data is there to kind of support that slightly more risk-on feel for the market?
Not quite as much as what I think is being reflected in the market at the moment. Now, certainly the last jobs report showed some resilience in the private sector, that the manufacturing sector recession was not dragging the private sector down with it. So that is some reason for optimism. But without doubt, the major motivating factor here in, I think, risk sentiment and the market tone more broadly is the trade negotiations. So, a month back, it looked like, we were not going to have this big improvement in trade talks, and now phase one, we're not entirely sure what that is going to include, if it includes a rollback of tariffs or whatnot, and I hate to use the term because it's so overused, the mood music around the trade talks has definitely improved in recent weeks.
Is it a boogeyman? I mean, in the sense that there already is slowing growth, and China would have been slowing down anyway, and developed markets aren't growing that fast.
You're absolutely zeroing in on a very important point here, that, right, you got a problem in 2019, blame the trade war. Right. So to some degree, it's getting a lot more credit than is warranted, but absolutely, trade tensions have depressed business sentiment that led to a pullback in investment and possibly some dampening of hiring intentions as well. So the trade issue is a big issue, but it might be getting a little more credit than is deserved.
Yeah, and I to that point, though, I think you've seen a lot of CEOs that have a lot of business investment sitting tight, and if that trade war goes away, we'll see a big, broad investment swing and a pickup in the economy.
Thank you both so much. We really appreciate it. Vince Signorella, global macro strategist for Bloomberg, Carl Cadana, chief U.S. economist for Bloomberg Economics. We are awaiting testimony by Fed Chair Jay Powell. He is going to be testifying on the economic outlook. And among interest rate expectations, it would be interesting to hear if he has anything to say about trade. Let's take a listen.
And Vice Chair Maloney and members of the committee, I appreciate the opportunity to testify before you today. Let me start by saying that my colleagues and I strongly support the goals of maximum employment and price stability that Congress has set for monetary policy. We are committed to providing clear explanations about our policies and our actions. Congress has given us an important degree of independence so that we can effectively pursue our statutory goals based on facts and objective analysis. We appreciate that our independence brings with it an obligation for transparency and accountability. Today I will discuss the outlook for the economy and for monetary policy. The U.S. economy is now in the 11th year of this expansion, and the baseline outlook remains favorable. Gross domestic product, or GDP, increased at an annual pace of 1.9% in the third quarter of this year after rising at around a 2.5% rate last year and in the first half of this year. The moderate third quarter reading is partly due to the transitory effect of the UAW strike at General Motors. But it also reflects weakness in business investment, which is being restrained by sluggish growth abroad and by trade developments. These factors have also weighed on exports and manufacturing this year. In contrast, household consumption has continued to rise solidly, supported by a healthy job market, rising incomes, and favorable levels of consumer confidence. And reflecting the decline in mortgage rates since late 2018, residential investment turned up in the third quarter following an extended period of weakness. The unemployment rate was 3.6% in October, near a half-century low. The pace of job gains has eased this year, but remains solid. We had expected some slowing after last year's strong pace. At the same time, participation in the labor force by people in their prime working years has been increasing. Ample job opportunities appear to have encouraged many people to join the workforce and others to remain in it. This is a very welcome development. The improvement in the jobs market in recent years has benefited a wide range of individuals and communities. Indeed, recent wage gains have been strongest for lower-paid workers. People who live and work in low- and middle-income communities tell us, many of them at these Fed Listens events that the chair and vice chair referred to, tell us that many who have struggled to find work are now getting opportunities to add new and better chapters to their lives. Significant differences, however, persist across different groups of workers in different areas of the country. Unemployment rates for African Americans and Hispanics are still well above the jobless rates for whites and Asians, and the proportion of people with a job is lower in rural communities. Inflation continues to run below the FOMC's symmetric 2% objective. The total price index for personal consumption expenditures increased 1.3% over the 12 months ending in September, held down by declines in energy prices. Core PCE excludes food and energy prices and tends to be a better indicator of future inflation, was 1.7% over the same period. Looking ahead, my colleagues and I see a sustained expansion of economic activity, a strong labor market, and inflation near our symmetric 2% objective as most likely. This favorable baseline partly reflects the policy adjustments we have made to provide support for the economy. However, noteworthy risks to this outlook remain. In particular, sluggish growth abroad and trade developments have weighed on the economy and pose ongoing risks. Moreover, inflation pressures remain muted, and indicators of longer-term inflation expectations are at the lower end of their historical range. Persistent below-target inflation could lead to an unwelcome downward slide in longer-term inflation expectations. We will continue to monitor these developments and assess their implications for U.S. economic activity and inflation. We also continue to monitor the risks to the financial system. Over the past year, the overall level of vulnerabilities facing the financial system has remained at a moderate level. Overall, investor appetite for risk appears to be within a normal range, although it is elevated in some asset classes. Debt loads of businesses are historically high, but the ratio of household borrowing to income is low relative to its pre-crisis level and has been gradually declining in recent years. The core of the financial sector appears resilient, with leverage low and funding risk limited relative to the levels of recent decades. At the end of this week, we will be releasing our third financial stability report, which shares our detailed assessment of the resilience of the U.S. financial system. Turning to monetary policy. Over the past year, weakness in global growth, trade developments, and muted inflation pressures have prompted the FOMC to adjust its assessment of the appropriate path of interest rates. Since July, the committee has lowered the target range for the federal funds rate by 0.75 percentage point. These policy adjustments put the current target range at 1.5 to 1.75%. The committee took these actions to help the U.S. economy, keep the U.S. economy strong and inflation near our 2% objective, and to provide some insurance against ongoing risks. As monetary policy operates with a lag, the full effects of these adjustments on economic growth, the job market, and inflation will be realized over time. We see the current stance of monetary policy as likely to remain appropriate as long as incoming information about the economy remains broadly consistent with our outlook of moderate growth, a strong labor market, and inflation near our symmetric 2% objective. We'll be monitoring the effects of our policy actions along with other information bearing on the outlook as we assess the appropriate path of the target range for the funds rate. Of course, if developments emerge that cause a material reassessment of our outlook, we would respond accordingly. Policy is not on a preset course. The FOMC is committed to ensuring that its policy framework remains well positioned to meet its statutory goals. We believe our existing framework has served us well. Nonetheless, the current low interest rate environment may limit the ability of monetary policy to support the economy. We are currently conducting a public review of our monetary policy strategy, tools, and communications, the first of its kind for the Fed. With the U.S. economy operating close to maximum employment and price stability, now is an especially opportune time to conduct such a review. Through our Fed Listens events, we've been hearing a diverse range of perspectives not only from academic experts, but also from representatives of consumer, labor, business, community, and other groups. We will draw on these insights as we assess how best to achieve and maintain maximum employment and price stability. We'll continue to report on our discussions in the minutes of our meetings and share our conclusions when we finish the review, likely around the middle of next year. In a downturn, it would also be important for fiscal policy to support the economy. However, as noted in the Congressional Budget Office's recent long-term budget outlook, the federal budget is on an unsustainable path with high and rising debt. Over time, this outlook could restrain fiscal policymakers' willingness or ability to support economic activity during a downturn. In addition, I remain concerned that the high and rising federal debt can, in the longer term, restrain private investment and thereby reduce productivity and overall growth. Putting the federal budget on a sustainable path would aid the long-term vigor of the U.S. economy and help ensure that policymakers have the space to use fiscal policy to assist in stabilizing the economy if it weakens. I'll conclude with a few words on the technical implementation of monetary policy. In January, the FOMC made the key decision to continue to implement monetary policy in what we call an ample reserves regime. In such a regime, we will continue to control the federal funds rate primarily by setting our administered rates and not through frequent interventions to actively manage the supply of reserves. In the transition to the efficient and effective level of reserves in this regime, we slowed the gradual decline in our balance sheet in May, and we stopped it in July. In response to the funding pressures in money markets that emerged in mid-September, we decided to maintain a level of reserves at or above the level that prevailed in early September. To achieve this level of reserves, we announced in mid-October that we would purchase Treasury bills at least into the second quarter of next year and would continue temporary open market operations at least through January. These actions are purely technical measures to support the effective implementation of monetary policy as we continue to learn about the appropriate level of reserves. They do not represent a change in the stance of monetary policy. Thank you. I will be glad to answer your questions.
Thank you so much for your testimony. The chairman, along with other senators, is voting. And because the Fed chair needs to leave at 12:30 at a hard stop, he is suggesting that we limit our questions to 4 minutes so that everyone gets a chance to question. So I will start and then go to Representative Marchant until the chairman comes back.
This is the Vice Chair of the Joint Economic Committee, Congresswoman Carolyn Maloney, Democrat of New York, beginning the questioning of Fed Chairman Jerome Powell. This is Bloomberg
Measures
Radio.
of underemployment and long-term unemployment also are at a near-decade low. Yet the unemployment rate for some groups is substantially higher. For example, the black unemployment rate, while at a historic low, is still well above 5%. Is the economy at full employment, or could a tighter labor market draw more people back into the workforce?
Thank you. So we're charged to achieve maximum employment. And when we think about maximum employment, we look at not just unemployment, but also labor force participation. We look at wages. We look at, many, many data points. And I would say that what we have learned and what we continue to learn is that the U.S. economy can operate at a much lower level of unemployment than many would have thought. Mm-hmm. And it's probably not surprising that we'd be learning that now, because we're at levels of unemployment that we haven't seen in 50 years. This is the first time that we've had unemployment meaningfully below 4% for 18 months. So we're observing this, and we're seeing, as you point out, that inflation is actually kind of moving sideways, and wages are moving at a healthy clip, but they're not moving up in a way that would suggest that there are upward price pressures. So I think we're very open to the idea. I'm very open to the idea that we don't know where maximum employment precisely is. We have to have significant humility when we make estimates of that, and we've got to let the data speak to us. And what the data are not sending any signal that the labor market is so hot or that inflation is moving up or anything like that. So I think what we've learned is that the current level of unemployment is consistent with a strong labor market. But it is not one that is in any way presenting difficulties, and it has many beneficial side effects, including pulling people back into the labor market, including wages moving up for people at the lower end of the wage spectrum. So there's a lot to like about today's labor market, and we'd like to see it continue strong, and we're using our tools to try to make that happen.
As you noted, the economy has added jobs for 109 consecutive months. Unemployment is well below 4%. However, the annual wage growth is just 3%. And why is wage growth still below what we would expect with a strong labor market?
We might have expected wages to move up more this late in a lengthy ongoing expansion, particularly with very low unemployment. And there are a number of possible explanations for why that hasn't happened. One is just that productivity has been lower. So wages should ultimately equal inflation plus productivity. And that's right about where we are. We have 3% wage growth. That accounts for about 2% inflation and around 1% wage growth. But there are other possibilities. One is just that there's still slack in the labor market. That can be part of the answer. We don't know with any precision. It also may be that the neutral rate of interest is lower than we've been thinking, and that therefore our policy is less accommodative than we have been thinking. So I think we're letting the data speak to us, and carefully monitoring the situation and trying to get answers to that question.
Some have said it's the increased concentration in different industries is giving employers unprecedented power in keeping wages down. Is that?
So I think there are a number of other sort of institutional possible explanations and trend explanations. You could point to automation. You could point to globalization. You could point to concentration among industries, where over time U.S. industries have tended to get more concentrated as the economy has matured. You could also point to lower unionization. So any of those factors can well be playing, and probably all are playing some role in this what is a bit of a puzzle. Why we haven't seen more of an uptick in wages.
My time has expired. Representative Marchant for 4 minutes.
Thank you, Madam Chairman. Republican Congressman Kenny Marchant beginning his questioning of Fed Chairman Jerome Powell before the Joint Economic Committee of Congress. Live coverage on Bloomberg Radio.
Primarily on preparing for the next downturn, whether it be 3 years from now, 5 years from now, whenever it comes. Historically speaking, is the Federal Reserve positioned as well as it has been positioned in past recessions when the Federal Reserve was the primary go-to agency where the federal government said, we need help from you to stimulate the economy. Are we positioned there, or are we out of position?
Well, if you look at typical post-war recessions, where what the Fed has done is it's cut interest rates, and on average, the amount of those cuts has been 5% or so. So with the federal funds rate having peaked at about 2.4% and now being at about a little above 1.5%, we don't have that kind of room, and there are a couple of reasons for that. Just if you look at the longer-term interest rates, which are not directly affected much by our policy, they've just been declining for 40 years now, and that is because of inflation being lower and under control and less volatile, and also just the aging demographics means higher saving, means more savings relative to investment, and that puts downward pressure on interest rates. So I think the new normal now is lower interest rates, lower inflation, probably lower growth, and you're seeing that all over the world, not just in the United States. You're seeing it to a much greater extent in many parts of the world than we're seeing it here. So, knowing that, that is one of the main reasons we have, really the basic reason why we are having this public review of our monetary policy framework to see if there are ways we can alter our strategies, our tools, and our communications in ways that would make us more effective in this world where we're too closer than we would like to zero when we kind of run out of options. So that's one thing. Fiscal policy will also be important, though. I mean, I think from the standpoint of monetary policy, we're looking hard at ways to make sure that we can use our tools even after rates go to zero. Ultimately, fiscal policy has been a key part of the countercyclical reaction as well, though.
And next question, the disruption in the repo market that took place in September, anticipated, not anticipated? Do you anticipate keeping the expansion at the level it is until you're sure that won't happen again?
Well, so anticipated or not, it's a different world post-crisis, and really because of all the expansion in our balance sheet and essentially what we've done now is we've now required financial institutions to have a lot more liquidity on their balance sheet so that the Fed doesn't have to run in and with our own liquidity. So that's I think a big benefit to the financial system. But a lot of that liquidity is held in our reserves. We used to manage the interest rate by keeping reserves scarce, and we had a total of $20 billion. Right now we have in excess of $1.5 trillion in reserves, and so that means that we're trying to find that level as we allowed the balance sheet to shrink where reserves would become scarce, and there was really no way to know. I think the data that we had suggested that we were not close to that point until September. I think we're still very much looking at what happened in September, but I think we learned in September that we needed to make sure that reserves didn't go under that level that we were at in mid-September, which is a little bit shy of $1.5 trillion. So that's really what we're doing. It's technical. I think we have it under control. We're prepared to continue to learn and adjust as we do this, but it's a process. I would say it's one that doesn't really have any implications for the economy or for the general public, though.
Thank you.
Representative Beatty for 4 minutes.
Thank you, Madam Vice Chair, and to the
Democratic
Chair.
Congresswoman Joyce Beatty of Ohio beginning her questioning of Fed Chairman Jerome Powell before the Joint Economic Committee of Congress. Live coverage here on Bloomberg Radio.
And one on climate change. The first one on the CRA, as we've talked about, is very important to me. I know recently that the Feds and the Office of the Comptroller of Currency and the FDIC have all been working on a proposal to revamp that 1977 CRA Act. It is my understanding that they wanted to do a joint, but we're not sure if one of the agencies would go alone. CRA is very important to me and to my 3rd congressional district in Ohio, like across the nation, because of the resources it puts back into communities, and more importantly, minorities communities tend to benefit. Do you have any insight on knowing where they are or if they're working together and will be able to meet that end of the year goal?
So we strongly support the mission of CRA, which is to assure credit availability in the areas that banks serve, particularly low and moderate income communities. We think it's a good time to modernize given technological developments and all kinds of other developments. We've been working very, very hard with the other 2 bank agencies to try to find common ground, and we're committed to making sure this reform actually puts us in a better place to serve the intended beneficiaries of CRA. We haven't quite gotten there yet. We're going to keep trying, though, and my hope is that we will ultimately be able to come together with a common answer, but which I think would be better for everyone if we can do that.
Okay. My next question is, the Federal Reserve Bank of San Francisco recently held a conference entitled The Economics of Climate Change, and I believe this was the first ever conference by the Feds on climate change and the economy. Can you discuss how the Federal Reserve views the impact of climate change on our economy and monetary policy, and how the Fed's views have evolved over time?
So I guess I would say climate change is an important issue, but not principally for the Fed. It's really an issue that's assigned to lots of other government agencies, not so much to the Fed. Nonetheless, over time it can affect us in some ways, which I'll mention. One just is that we require financial institutions and financial market utilities, the large utilities that are so fundamental to the financial system, we require them to be resilient against all kinds of things, including severe weather. There's a link between severe weather and climate change. So in a sense, we're already, to the extent severe weather is becoming more common, we're already incorporating that into our supervision. And we'll have to think ahead. We're doing a lot of research in this area to think ahead about sort of from a risk management perspective. Our perspective is we're not going to be the ones who decide society's response to, that's going to be elected legislatures, not us. In terms of monetary policy, it doesn't have any near-term implication for monetary policy. Over time, climate change could have effects, but it's not something that we'd be considering.
Okay.
Now.
And only because of my time, my last question is, there was a 2018 report by Price Waterhouse that found that 80% of the venture capital investments went to just 4 states: California, New York, Massachusetts, and Texas. I'm from the great state of Ohio. And so I guess my question is, startups throughout the rest of the country, especially the Midwest, are overlooked. Are there any thoughts on the fact that an overwhelming majority of the venture capital is going to 4 states? What effect is this having on the regions like the Midwest?
I'd have to look at that study. I think, a company that's in San Francisco can invest in a company that's in Ohio, though. So I would hope that they're not just investing in companies in San Francisco, but...
So we should maybe look at some partnerships and how that works.
I do think, many of the successful companies in which venture capital firms invest are not located in those areas. Some of them are, but some of them are located anywhere in the country, really, where they're entrepreneurs.
Okay. Thank you.
Representative Schweikert, 4 minutes.
Thank you, Madam Vice Chairman. Chairman Powell,
David Schweikert,
can I ask more of a global question?
Powell before the joint
if you look at much of the data
you're listening
from
to
the
Bloomberg
Fed,
Radio.
from the BLS, from others, our society is actually in many ways a sweet spot. A, do you agree with that? B, what do we do policy-wise to stay there? And for those of us up here, how do we not screw it up? And then how do we actually bias it towards the positive? What would you do?
So, as I mentioned, 50-year low in unemployment, inflation low and under control, labor force participation ticking up, consumer confidence high. The outlook is good. I think households generally are focused on, according to the surveys, are focused on this healthy job market and wages going up. So it's actually a very good place from that standpoint. That's not to say that every community has benefited. We know that that's not the case. How do we keep it there? So the key to this, given the risks that we see are slowing global growth and particularly weaker manufacturing, and that affects U.S. manufacturing. So the key to keeping this going and to it continuing are that we keep job creation at a solid level, that households retain their confidence, that wages keep moving up. That seems to be the engine that's driving the U.S. economy forward at this time. But I want to go longer term with an answer. I mean, the U.S. faces longer term issues that really need your attention around labor force participation and productivity. Those are the two things that we really, in labor force participation, we lag most other advanced economies. And that's something we can do something about. That really the Fed can't do much about it. So it's more about fiscal policy. That's support attachment to the labor force.
So much of the policy that we all engage in here could be pushing up labor force participation. We're right now, what, about 63.3?
That's right.
Which for some of our models of testimony we had as a committee a couple of years ago, we didn't think we'd get that far. But we've demonstrated that there is slack out there. Could you touch on what we could do in that demographic headwind that is where we are in the United States to also encourage that labor force participation? Incentives for someone that's older to stay in the labor force, getting millennial males to actually start to equal millennial females in the labor force.
Well, I think
what would you do?
There's a range of policies, and they would appeal, I think, across the political spectrum. Some of them are about labor demand, some are about labor supply, and I think many of them would work. That's the great thing and I think for young males, it's going to be addressing the opioid problem. It's going to be skills and training and internships. We had a great meeting with a bunch of experts on internship programs recently. I think you're seeing older people stay in the labor force more and more. Their participation is moving up. But you also see, I think there are lots of programs which are pulling people, for example, women who've been out of the labor force back in after their kids are grown up. You see that happening at places as well. So I think there are just so many things that can be done. And we lag just about every other wealthy country in the world in labor force participation for prime age workers. This is not where we should be, and I think there are things we can do about it.
In my last 20-some seconds, slight non sequitur. Okay, with the dual mandate, how often in your conversations with your economists do you get into the discussion of currency differentials and the headwinds that actually creates both in export and capital coming into the country? Where are we currency-wise in your conversations?
Exchange rates are one financial condition among many, and it happens to be one that is assigned to the Treasury Department for management. So the Treasury has full responsibility for exchange rate policy. We don't. It's just it's in all economic models when we change policy.
So it's just a model input?
It's just a model input. It's in no way is it a principal driver of the way we think about policy or the way other central banks do.
Thank you, Mr. Chairman. Madam Vice Chair, thank you.
For 4 minutes, Lois Franklin.
Thank you, Madam Chair. Thank you for being here, Mr.
Democratic Congresswoman Lois Frankel of Florida, beginning her questioning of Chairman Powell before the Joint Economic Committee of Congress. You're listening to Bloomberg Radio.
Comment on it. I have a couple of questions related to this. So we've all heard about the gender wage gap. Women on the average make only 82 cents to average a man's dollar. It's much worse for women of color. But there are two sides to a family's budget, the income that comes in and the expenses they pay out. And new research is finding that in addition to the wage gap, there is rising inequality on how quickly prices are rising for families struggling the most in the economy. This concept known as inflation inequality means the kinds of products disproportionately consumed by richer households, think organic produce and name brand drugs, rose in price at a slower rate than the kinds of products consumed by low and moderate income households. Just released research by Columbia University begins to quantify these impacts by updating poverty rates for an adjusted inflation index that accounts for inflation inequality. And the article goes on to suggest that an appropriate course of action would be to peg the federal poverty threshold to a higher rate of inflation, given how many more people would be considered in poverty when looking at the expense size of the ledger. I would just ask you whether or not any of this enters into any of your decision making, whether you have any research on this or any comment on this.
It's an interesting, so I did see that research, which showed that, different groups of people buy different baskets of goods, and in principle, inflation can be higher or lower. This was a piece of research that showed that the basket of goods that are bought by people at the lower end of the income spectrum has experienced higher inflation over time. So, and that the implication of that would be that their real incomes are even lower than we think. So I'd like to see a lot more research on that. That's an interesting recent paper that's getting a lot of attention right now. There's no definitive answer. There's a series that I guess the government currently conducts for consumer price inflation that looks at a basic basket of goods that finds a much smaller difference. Nonetheless, it's an important issue that needs further research.
Is that something that you would be doing, or you think somebody else should be doing that research?
Well, our researchers would do it, but you would tend to see, the agency, whoever does CPI, is it the Bureau of Economic Analysis, I guess, does CPI, and they would do that. We have researchers who do research on inflation all the time. I'm not sure whether the piece I don't think the piece you mentioned it was a Fed piece, but we have researchers who research everything.
It was at Columbia University.
Yeah. But they were co-authors. There were several co-authors.
And I wanted to ask you another subject. Could you explain the relationship of our immigration policy to employment rate and the economy?
Sure. So first, we don't have responsibility for immigration policy. We don't comment on it. We don't advise anybody on immigration policy. It's completely not our role. But it does kind of connect to our role in analyzing the economy. So you can think of the economy's ability to grow as consisting of two things. One is how fast is the labor force growing, and secondly is how much is output per hour growing. That's what growth consists of, really just those two things. In the United States, the trend growth of our labor force has been very slow. It was 2.5% in the 1960s. Now it's about 0.5%, and about half of that is immigration. So immigration is a key input into our longer-term growth rate. And I would say if you look to population growth as a way to support higher growth in the United States, then immigration would need to be in your thinking. But again, something we don't comment too much on.
Thank you. I yield back.
Thank you, Representative Trone.
Thank you, Madam Vice Chairman. Chairman Powell, thank you for being here today very much. I had some questions also on labor market participation, and I think you've addressed those, and also on immigration, how that could help.
Democratic Congressman David Trone of Maryland questioning Fed Chairman Jerome Powell.
But I was thinking about the status of across the country now. We've got over 30 states that put in minimum wage laws from $13 to $16, and there's something business is affected with everywhere. How do you see that's going to address the situation on the mismatch between labor scarcity and yet this very low wage growth that we see, and how's that tie into inflation?
Well, we don't take a position on minimum wage. It's really an issue you have to balance. There are two things to balance, and if I were you, I'd look at a broad range of research. Research comes to different perspectives, but in essentially all the research you see, when the minimum wage is raised a significant amount, you'll see some job loss and you'll see some wage gains. And I would look at a range of that research, and I would try to think what the right policy is. That's how I would do it. In terms of inflation, it doesn't really play much into it. First of all, our mandate is price inflation, not wage inflation. We don't see wages moving up in any kind of way that suggests that they would put unwelcome upward pressure on prices. So I don't really think it is an important part of the inflation discussion right now.
And trying to translate this labor scarcity that we have into higher wages for the American workers. From 2012 to 2016, we had about $120 increase per month in average wages. And then in 2016 to current, that's been cut in half, about $56 a month. And yet this is in the time of the lowest inflation, as you said, in 50 years, these last 18 months. So what does that mismatch between wage growth and lower unemployment mean to our economy?
Well, so we look at a wide range of wage and compensation measures, and what they tend to show is if you go back 5 years, wages and compensation were going up about 2%. That has gradually moved up to about 3%. And so that's really the trend has been upward. And that's consistent with the thought that a tighter labor market, lower unemployment, and surveys that suggest the labor market is tight. It is consistent with that. We've seen wages moving up. We look at I could tell you the principal ones we look at, but I think that's true across all major measures of wages over the last, let's say, 5-6 years.
But why do you think they've slowed so dramatically the last 2 years?
I think it's hard to say. I think average hourly earnings is an important one, which peaked at 3.4% earlier this year or at the end of last year, and has been sort of trickling down. It's right at 3% now, so it's a fairly modest one. I'm not at all sure why that is. It may be compositional effects. Some argue that as older workers retire, younger workers come in and they have lower. But in any case, it's consistent with this idea that we're not seeing excessive tightness in the labor market that's generating outsized wage gains. We're seeing kind of nice wage gains given inflation and productivity, but nothing that's at all out of line with that.
Thank you.
Chairman Powell, we're borrowing as a country, as a government more than ever, with debt held by the public expected to reach 95% of gross domestic product within the next 10 years. And yet we're also
Joint Economic
paying
Committee, Utah Senator Mike Lee, Republican, questioning Fed Chairman Jerome Powell. Live coverage on Bloomberg Radio.
Borrowing cost of just 2.4%. What's the reason for this, I guess some would say, fortunate fiscal reprieve at a time when Congress as an institution has shown really no sign of fiscal discipline at all? So where does it come from?
Well, it really is a long-term trend. For example, if you were to look at a graph of what the 10-year Treasury yielded, if you went back 40 years, what you would see is a ski slope down, and it's all the way down to today. This is a long-term trend. By the way, it's true all around the globe. Now, why is that happening? I think first of all, it's inflation getting under control, becoming less volatile, and ultimately continuing to decline to the point where the risk of lower inflation is actually greater than the risk of higher inflation at the moment. That's part of it. It's also just aging demographics. So as people get into their later years, they save more. That creates more savings and per dollar of investment, and that tends to drive interest rates down. And I don't know that trend shows no signs of reversing or anything like that. So that's really what's going on with these longer rates.
Some have suggested that because we in the United States, that the United States government borrows in its own currency, this level of spending isn't a problem because the Fed can just monetize the debt and keep doing so more or less indefinitely. What's your reaction to that talk? Are there risks inherent in it?
Yes, as I mentioned in my testimony, the fact that interest rates are lower does mean that we will pay less in interest. It does not mean that we can ignore deficits at all. We're going to have to get on a sustainable path. What does that mean? So the debt is growing faster than the economy. It's as simple as that in nominal terms. And that is, by definition, unsustainable. Ultimately, you will have to get it to where the debt is not growing faster than the economy. And it's growing faster in the United States by a pretty significant margin. So even with lower rates and even with decent growth, there's still going to be a need to reduce these deficits. And I would say, by the way, that's a need over time. We're not in the business of advising you when to do that or how to do it, but it is inevitable that over time we will have to do it. And frankly, if we don't do it, what happens is our children will wind up spending their tax dollars more on interest than the things they really need, like education, security, health.
In the past, you've mentioned uncertainties in the area of international trade as imposing something of an economic headwind for us. After we've had over the last couple of years a lot of trade measures going into effect, what has the Fed learned about the interaction between trade and monetary policy?
So the first thing I need to say is we should never be heard to be commenting on trade policy. It's not our job. We try to stay in our lane, but our lane is the economy. But we don't have any view at all, and we wouldn't express one on trade policy itself. Our lane is the economy. So in principle, anything that affects our ability to achieve our mandated goals is an appropriate subject for monetary policy. So we've been hearing now for a year and a half from companies, and I think this is fairly widely accepted now, that tariffs, but to an even greater extent, uncertainty around future trade policy is, for now, it has been weighing on business sentiment and is probably part of the global slowdown in manufacturing, in business investment, in exports, in trade. Part of the story. There's a much bigger story out there, but it's a part of that.
see my time's expired. Senator Klobuchar.
Thank you very much, Mr.
Democratic
Chairman.
Senator Amy
Thank you
Klobuchar
to
of
you,
Minnesota.
Mr. Chairman, for being here today.
Fed
Some
Chairman
of the
Jerome Powell,
issues that
the
I
Joint Economic
raised
Committee
have
of
been,
Congress. You're listening to
discussed,
Bloomberg
the
Radio.
challenges ahead with our economy, including the deficit, which I will note was greatly exacerbated by the last tax bill. And as well as problems in some sectors such as agriculture, which is very important to us in the Midwest. But I wanted to focus on a third issue I have, which is income inequality. And even if people have jobs, it's often hard for them to afford things. And then you have the added problems and strains. Washington Post reported this year in September that income inequality in America is the highest it's been since the Census Bureau started tracking it more than 5 decades ago. The top 1% have experienced income growth of over 200% in the last decades. And between 2007 and 2016, the median wealth of lower income families fell by 42%. In your opinion, will widening inequality lead to lower growth expectations over the long term? And what should we be doing about this?
So I guess I would start by saying that I think we probably would all agree that prosperity should be as widely shared as possible. And so I would just point to 2 aspects of the broader problem that I think are important and need attention. The first is just the relative stagnation of incomes below the fairly high part of the distribution. And that's even after allowing for taxes and benefits and things like that. That's one thing where we want to see incomes moving up broadly across the income spectrum. The second is mobility. I think you want to see people moving from the bottom to the top, and vice versa. By the way, it has to happen just as a matter of arithmetic. For example, the bottom 20%. What are the chances that if you're born in the bottom 20% of income or wealth, you'll make it to the middle 20% or the top 20%? The United States actually lags most other wealthy countries in that measure now. This is very much not our self-image as a country, and those are things we need to address. So I think those are important.
That's one. And I think increasing the minimum wage, I have my own views on this, would be helpful. But as you talk about that, one of our challenges right now is hooking up our education system with the jobs that are available right now and making sure everyone has access to those jobs. And I don't think it always means a 4-year degree. Some of the fastest growing job areas are 1- and 2-year degrees. I think we're going to have 64,000 or 74,000 openings for electricians. And one of the things I'm really focused on is apprenticeships and trying to make it easier for people to access those kinds of degrees. Could you briefly talk about that?
We just met last week with 6 people who run apprenticeship programs and funding of apprenticeship programs around the country in our boardroom, and I have to tell you, it's very, very impressive what they can do. They're focusing on low and moderate income communities. They're getting them in high schools and out of high schools and matching them up with employers who need those people. They're getting good jobs. It's really working. And the thing that limits their ability to do this on a much wider scale is funding.
Exactly.
Yeah, it's very impressive what they can do.
I think a lot of this is how we use our resources for education and matching that up. I'll ask you in writing a question on retirement. I just think it's becoming such a challenge in our new economy and Senator Coons and I have a bill to address that called Up Savings Accounts, which I think is a great idea for small and medium businesses. But my last thing is back to the income equality very briefly. How would reporting economic statistics by income bracket benefit our understanding of the economy? We don't have that right now.
We're actually doing something with that at the Fed. We like to cut data up and look at it in new ways, and this is one of the things we're doing is combining a couple of data sets that we had. We're quarterly publishing a distributional financial account.
And when will we get that then? By the next?
The next one comes out every quarter. So it's a new thing that we're doing. And again, it's just a combination of 2 existing data sets that we have. But we think it's an interesting insight into the economy. There are a lot of different ways to look at what's happening in the economy, and that's an important one.
Thank you.
Representative Herrera Butler.
Thank you. So I apologize if some of this ground has already been covered, but it's a pleasure to be here and to have you. This is the number one, I would say the growth and the forecast of our economy is probably the number one thing that impacts the people I serve in Southwest Washington. And so it's helpful to hear from your perspective. Specifically, in rural communities where unemployment is higher than the national average, most of my areas are rural, although we're bumping up everywhere. I wanted to hear some of your biggest takeaways, and I've gone through some of your testimony. Again, I apologize if you're repeating, but in terms of outlook and some of the things that we've done in the most recent years with regard to the Tax Cuts and Jobs Act, different regulatory changes, but to either maintain the growth that we've seen or expand it, what recommendations would you give?
Well, first, I think the outlook is still a positive one. There's no reason this expansion can't continue, and there's a lot of value in continuing it, and we're trying to use our tools to accomplish that. We're seeing this the 11th year of an expansion, now the longest in U.S. recorded history. What we're seeing is that income gains are the highest at the lower level of the lower end of the wage scale, and so it's very positive. We're also seeing people being pulled back into the labor market. There's a lot to like about this rare place of the 11th year of an expansion, and I think we're certainly committed to doing what we can to extend it.
In that vein, I know your testimony touched on concerns with regard to the national debt. Could you elaborate on that and how it should be addressed, particularly as it relates to expanding or at least not contracting the economy?
So I think it's a longer term issue that I imagine we all realize will have to be addressed over time. It's just the case that now that the debt is growing faster than the economy, than the nominal GDP, and ultimately in the long run that's not a sustainable place to be. Now, how to fix that? It's easy to say that, and how you do that and when you do that is an issue that is up to you and not to us. But I would be remiss in not pointing out that the consequences of not addressing it are just that we'll be spending more and more, our kids really and grandkids, they'll be spending their tax dollars servicing debt rather than on the things they really need, as I mentioned earlier: education, healthcare, security, all the things that we need, that they'll need. They'll be spending more and more of their money on tax. You don't need to balance the budget or pay down the debt or anything like that. You just need to get the economy growing faster than the debt, and that should be I think, the goal. And by the way, the successful programs for countries to get back on a sustainable path tend to take place over a long period of time and be relatively gradual. And I would be looking at something that would work over time, but really would not be giving you a lot of advice on how to do it.
With my final 30 seconds, do you anticipate maintaining the current Fed rate through the next year?
No, I wouldn't say that at all. What I've said here, and I'll go right to the actual language, is that we see the current stance of monetary policy as likely to remain appropriate as long as incoming information about the economy remains broadly consistent with our outlook of moderate growth, a strong labor market, and inflation near our symmetric 2% objective. So that's a very data-dependent statement. We do think monetary policy is in a good place, but we're going to be watching very carefully incoming data, and if developments emerge that cause a material reassessment of the outlook, then we'll act appropriately.
Context. Thank you. I appreciate it. With that, I yield back.
Representative Beyer.
Mr. Chairman, thank you very much for your equanimity, your strong and stable leadership, and for providing about the most straightforward answers of anybody we talk to. Yesterday at the Economic Club in New York, the president continued his criticism of the Fed, saying it had put the U.S. at a competitive disadvantage, and he also floated the idea of negative interest rates. Do you take comments from public officials into account when implementing monetary policy? And is there any precedent in U.S. history for this kind of criticism or praise from an American president?
So we look exclusively at the data, at the research, and at the performance of the U.S. economy. Those are the things we have a very careful, thoughtful process that's been developed over decades, over a century, really, and that's how we try to set interest rates. We don't consider political factors and things like that in what we do.
Thank you. I have a friend in Switzerland who went to borrow $10 million and got a negative interest rate, negative 0.3%. So they're paying him $30,000 a year to borrow $10 million. Do you see any prospect for negative interest rates in the U.S. economy?
Well, negative interest rates would certainly not be appropriate in the current environment. Our economy is in a strong position. We have growth. We have a strong consumer sector. We have inflation that's a bit below target. So the very, very low and even negative rates that we see around the world would not be appropriate for our economy. Those you tend to see negative rates in the larger economies at times when growth is quite low and inflation is quite low. That's just not the case here. It's different for some of the smaller European countries. It's really about keeping their currency from appreciation, which is the case with a number of those countries.
Yeah. From December 15th through December 2018, there's slow, consistent increases in rates, and we've turned that around with recent cuts this year. Is there enough room to cut rates further if we get another slowdown or recession? Have we given up monetary policy as a tool at the moment for dealing with that?
Well, the typical post-World War II recession has involved rate cuts of close to 5%. The current federal funds rate is in the mid-150s, so we're well short of that, 1.5%. So I think it's a fact, not just in the United States, but around the world, that central banks are going to have less room to cut in this new normal of lower rates and low inflation. So that's why we are conducting this external review of monetary policy at the Fed. We're looking for ways to make sure that we have the tools to do what we're assigned to do by you, which is achieve maximum employment and stable prices, even in downturns. And that's what we're going to be doing. I will say also, though, that fiscal policy is often part of the answer, often a big part of the answer when there's a severe downturn. And we would certainly look for that to be the case if needed.
Thank you again by bringing up the challenge that the public debt faces all of us here. I was raised to believe that money supply and growth were causally related, that if our money supply grew more quickly than our economic output, that inflation was the inevitable result. But we're less than 2% this year. You have muted expectations. Is there no longer a connection between money supply growth and inflation? Should I pay any attention to modern monetary theories, for example?
Well, so the connection between monetary aggregates and inflation, that's something we all learned in Econ 101. I did. It was important. It was generally thought to be, and empirically it was a good relationship. I think about 40 years ago, as the financial system developed all kinds of alternative forms of money, the relationship between monetary aggregates and growth has just gone away. And so we of course look at those aggregates, but they no longer are a driving part of the theory. It's really the price of money as opposed to the quantity that we look at, which is interest rates.
I'm out of time, but thank you very much. Mr. Chairman, I yield back.
Senator Cotton. Thank you, Mr. Chairman. Chairman Powell, welcome back. I want to start off by talking about China's economic growth. Maybe I should say China's economic growth, in quotes. They've reported most recently 6.5% growth. That's down from most of the last 30 years, but still probably somewhat inflated. In fact, Michael Pettis at the Carnegie Endowment for International Peace says that Chinese industrialists and economists find it hard to find any economic sector in China enjoying any growth. He had a few findings that I found to be quite interesting. First, GDP is not a particularly useful measure for determining Chinese growth because they have such massive investments in non-productive activities. Second, that China likely distorts its GDP data significantly in a way that's systematically pushing it higher. And then third, that increasingly GDP, as reported in China, is not so much a measure of economic output, but a measure of political intent, given the benchmarks that China imposes on local governments as well as many state-owned enterprises, as long as they have debt capacity and can postpone the writing down of non-productive assets. They could essentially achieve any growth target they wanted. What are your thoughts about this general question of Chinese growth and the specific points that Mr. Pettis' research had found?
I think it's very hard. I certainly feel that it's very hard to understand China. You can read all you want, you can visit it all the time, but nonetheless, it's still very hard, I think, for me anyway, to really feel like you understand the way the economy works, the way the society works. So I think that I think you have to, as a general matter, just accept that it's really hard to know. I think on economic data in particular, we don't, I'm familiar with Michael Pettis and his research and all that, but we haven't taken a view as an institution about that. I think a couple of things are worth noting. One is that, it may be that there's more information in the change than there is in the level, if you know what I mean. Another is that we've noticed here in the last few years that the volatility of their economic reports has declined substantially, which just kind of suggests a little bit more management. Nonetheless, we don't really know. The truth is we don't really know. We have to take the data, and we do take it with a bit of grain of salt.
You spend at the Federal Reserve, and you're many capable economists there, a lot of time looking at a lot of underlying indicators and statistics, try to assess the direction of our economy. When you look at not just how the Chinese leadership and the Communist Party behave, but when you look at some of those indicators, well, how their people are behaving, or how other things like, say, maybe energy inputs or shipping, so forth, do you see a country behaving as if they have almost 7% growth right now?
It's hard to say. I would say that one thing that's notable is that they have not responded with massive stimulus to this current situation. They've had, obviously, over a longer period of time, growth has been slowing from 3 decades of 10% as an economy matures, and I think they're trying to manage that decline. They did put an awful lot of stimulus to work after the financial crisis, and that supported their growth. I think they have been much more cautious and careful. They have a deleveraging campaign, as I'm sure you know, that's been going on now for 1 or 2 years, and they haven't really backed away from that. And that's part of, by the way, I think that is part of the global slowdown, actually, is trying to at least stop debt from growing inside China, where they have unusually high debt as a society for any emerging market nation. So I would say that they're behaving relatively thoughtfully and responsibly in response. They appear to be in response to this current slowdown.
All right, thank you. My time has expired.
Senator Hassan.
Well, thank you very much, Mr. Chair, and I appreciate your and the Vice Chair's convening of this meeting. And to Chair Powell, thank you for being here and for your work. Mr. Powell, as you know, it is critical to the long-term safety and stability of the U.S. economy that the Federal Reserve makes data-driven decisions and remains independent from political influence. Unfortunately, recent political pressure on the Fed is having real-world economic consequences. A recent study found that markets react each time you are publicly pressured to intervene in the economy, with a quantifiable change in investors' expectations that the Fed's interest rate targets will drop. Chair Powell, can you tell the committee what actions you are taking at the Federal Reserve to not only insulate against political influence, but also to signal to investors that the Fed makes independent decisions based on sound economic analyses?
Thank you. So politics plays absolutely no role in our decisions. We use the best data, the best analysis we can muster. Mm-hmm. We're human, we'll make mistakes, but we won't make mistakes of character or integrity. I am familiar with that research, and I would just say I think it's very hard to look at, our incredibly complicated financial markets and economy where many things are driving results and pull out one or two tiny effects. There's other research that points to different results, but it's absolutely essential that everyone understands that we are doing our jobs as we always have, without regard to politics. We serve all Americans. We do the best we can based on our analysis. We try to be as transparent as we can. We explain ourselves put everything we do on the record. When people dissent, they put their dissent on the record.
Yep.
And that's as it should be.
Yep. Well, I just think it's important, understanding that research is complicated, that we don't complicate it further with political actors putting pressure on the Fed. And that has been the norm and the tradition, and it's one that I hope we can return to. I wanted to follow up on something that Senator Lee had talked to you about, because as a member of the Senate Finance Committee, which also has jurisdiction over trade, I'm pushing for clear strategic trade policy that provides certainty to struggling small businesses. As you and I have talked about, I've heard from businesses all across my state that have been targeted by China's unfair trade practices, including the theft of intellectual property and the forced transfer of proprietary technology. On top of these economic harms, the administration has manufactured endless trade uncertainty and heaped damaging tariffs on New Hampshire's businesses. I know you have repeatedly said, Chair Powell, that this recent trade uncertainty has created risks for the U.S. and global economies. Can you expand a bit on your previous answer on how trade uncertainty has impacted the economic outlook and what you view as the Fed's proper role in responding to the ongoing trade tensions with China?
So we hear from businesses and have been hearing them for a year and a half that that this is a big issue for them and that it's holding them back from making decisions. I mean, in the first instance, businesses were looking at ways to rearrange their supply chain. Almost all manufacturing businesses these days have supply chains that go. So I think it's been a real distraction for management, and I think it's weighed on businesses' willingness and ability to invest and keep growing and that kind of thing. In terms of the appropriate response, our response is not to give advice on trade policy, but it is to react to whatever it is that is either helping or hurting our ability to achieve our mandated goals. And so this is one of those things. We call it out as something that we are aware of and as something that is weighing on business sentiment and ultimately on the economy.
Well, thank you for that. And I'll just note, we may submit to the record that I share Representative Frankel's interest and concern about the inflation gap. It's not just a wage gap, but the impact of inflation, particularly on our working and middle-class families. And I hope that that's something we can learn more about from the Fed. Thank you, Mr. Chair.
Senator Heinrich.
Welcome, Chairman, and thank you for coming to testify today. I had a chance recently to meet with a number of European central bankers, and they really outlined for a group of us the steps that they're taking to understand and quantify and mitigate the risks that climate change is posing to the financial markets. So I wanted to ask you what the Fed is doing to understand those risks and to look at their role in the economy as we're moving forward.
I'd just say climate change is an important issue, but it's not principally one that is it is not one that is given principally to the Fed to deal with, if you will. To other agencies have that.
Clearly, that's the case. I just want to understand if we're looking in a broad way at risk and understanding the data from that sort of lens.
So I think that is the right lens. The lens for us is risk management. Mm-hmm. So we're doing, there are researchers all through the Federal Reserve System who are thinking about the longer run implications of climate change for the economy, for financial institutions, and for all kinds of things. And I think that's appropriate research. We're just globally at the beginning of understanding that, and there's a lot of research going on, including a significant amount at the Fed. I think, honestly, for monetary policy, it's not a current consideration. It would not be something that would have any effect on the current setting of monetary policy. Over time, though, it could, for example, affect the neutral rate of interest or the volatility of economic activity and things like that. Those are things that we're thinking about for the longer term. I think the public will expect us to assess any risk and use that assessment in the way we supervise, regulate financial institutions, and also just potentially over the longer term in terms of monetary policy.
Do you have an opinion on the robustness of how U.S. banks broadly are analyzing that risk? And basically what I'm asking is, do we need to start thinking through whether or not we need to either self-impose or at some point impose some sort of stress test to look at the assets that banks are holding and whether they're not whether they don't have some concentration of risk if they're not thinking through that appropriately.
What we're doing now is we are trying to make sure that financial institutions that are in regions that may be subject to severe weather have plans to have redundant systems and be able to be resilient to that. That's the main thing we're doing. I think so. The Bank of England, it sounds like you're aware, is doing a stress test based on climate scenarios, but it's not. It's a stress test that's meant to be purely informative. It wouldn't do what our CCAR stress tests do and potentially limit distributions and that kind of thing. That's an interesting idea. We'll be monitoring it. And I think we're going to benefit from some of the activity around the world that we're seeing with other central banks. We'll try to learn from what they're doing.
Yeah, we're obviously already seeing some places where it's harder to turn over a house in flood-prone areas. And if you had a concentration of mortgages that you were holding in areas like that, obviously that could pose a real financial risk. Do you think that GDP data adequately gives us enough of a picture about who is benefiting from the economy? And I guess in other words, should we be looking at how economic growth is being distributed across the quintiles of the economy?
I think it's really hard to capture gross domestic product in a $22 trillion economy. I think the people who do that do a great job at it, but it's quite difficult. We actually, it's interesting to try to cut the income data. So we're doing some of that now with our distributional financial accounts. Other agencies are doing the same thing. I think when you have the data, we have a tendency to want to cut it up different ways and see what we learn. And so we're doing that now. And I think it is informative about the way income and wealth are shared, broadly speaking, in the country. It's an important perspective.
We're certainly looking forward to seeing that data.
Great.
Thank you.
Senator Cruz. Thank you, Mr. Chairman. Chairman Powell, welcome. Thank you for your testimony. We are right now experiencing remarkable economic growth across the country. We have the lowest unemployment in 50 years. We have the lowest African-American unemployment ever recorded. We have the lowest Hispanic unemployment ever recorded. In your judgment, what economic policies have played the most important part in generating that economic growth that we're seeing right now?
Well, I think I'd be reluctant to single out particular policies. I'll just say this, though, that it's been a long, slow recovery, but it's come a long way. We're now in the 11th year. It's the longest since we began keeping, credible records of the U.S. economy in the mid-1800s, the longest one, and we hope a significant way to go. We've just seen continued improvement, and I think I would point to a couple of things. These long expansions are common now, and that really is because we conquered the high inflation. We've seen 3 of the 4 longest expansions in U.S. history have been among the last 4 expansions. So it's kind of become the norm to have these long ones. I hope everyone takes credit for the good economy we're seeing now, because it is a really good place. I think it's worth noting, as you mentioned, 50-year low in unemployment, wages moving up at the bottom of the scale more than anywhere else, growth continuing at a solid pace in the 11th year of the expansion. I think it's a really good time, and I want everybody to get credit for that. Mm-hmm. Not us, but.
So I have real concerns that going into 2020, that we may see a slowdown in investments as those allocating capital look at the political scene and look at some of the economic proposals being put forth by Democratic candidates for president. And I have concerns that may cause people to tap the brakes in terms of deploying capital until at least after the election and finding out whether these policies might possibly be implemented. In your judgment, what would the likely economic impact be of the federal government implementing a massive tax increase?
Senator, I'm pretty reluctant to be pulled into the 2020 election, if you will forgive me.
And I certainly don't expect you to comment on the election, but you can't comment on the economy, and if a massive tax increase is good or bad for the economy.
That's indirectly as you started at your question. It's about proposals of candidates, and I just, honestly don't want to get into that business if you'll forgive me.
Well, let me ask you, a number of candidates are proposing a wealth tax, not just on income, but on wealth. Do you have any views on the economic behavior that would likely follow from a wealth tax scaling as high as 8% annually?
It is really not our role to score or evaluate campaign proposals, and that's what the CBO does. That's what lots of other people do. We really try to stay out of that business.
All right. Well, let's try a different thing. Former Chairman Ben Bernanke in 2014 called the shale revolution, quote, one of the most beneficial economic developments in the country. Do you share that assessment? And conversely, do you have concerns about the impact on the economy if the federal government were to ban fracking and shut down the shale revolution?
I would certainly agree. I think that the energy independence of the United States is something that people have been talking about for 50 years, and I never thought it would happen, and here it is. It's in the nature of a miracle, it seems to me. So it's a great thing, I would say. It's not to say there aren't issues to manage, environmental issues, all kinds of other issues, but I think it's been a great thing for the country.
And would it be harmful to end it economically?
Well, I wouldn't be looking. I wouldn't be. I think to shut down the shale industry, that would probably not be a good thing for the economy.
Thank you.
Thank you very much, Mr. Chairman. We know you have a hard stop here in about 2 minutes. I wanted to use my prerogative as chairman to ask one final question. We're in the middle of some pretty strong economic activity, very low unemployment. Almost unprecedented economic stability. What policy or policies should we pursue to keep that going?
Well, I think that if you're asking for my views on that, I think that the thing to focus on, if I were in your shoes, are the longer run issues that we face, particularly around labor force participation and growth. It's about the potential growth of the United States. We are seeing now how important it is and how good it is to have a long expansion with a lot of growth, and how it benefits people across the income spectrum. So I can't overstate the importance of that. I think in the longer run, the things we need to address are labor force participation and productivity, which is closely linked to education. So I think our workers need to have the skills and aptitudes to win in a global economy, and those are the things that are going to matter for our children and our grandchildren. Is what can we do now to keep the U.S. sustainable longer-term growth rate as high as it can be going forward.
Thank you very much. Thanks so much for joining us today, and thanks for your service on behalf of our country. Record will remain open for 2 weeks. We stand adjourned.
Thank you very much.
We have been listening to the testimony of Fed Chair Jerome Powell before the Joint Economic Committee on Capitol Hill. And he's been addressing a raft of things, including, of course, fiscal policy, and as well as perhaps risks to monetary policy as well, what the chances were of their raising interest rates, which he would not commit to at all, and a wide range of things, including income inequality and the job situation and inflation. Let's bring in now Mike McKee, who is our international economics and policy correspondent. So let's go to the core issue that the street wants to know. Are they going to raise interest rates? Are they going to keep cutting interest rates? I'm not sure we learned.
We didn't learn anything different today. Jay Powell was very careful to basically lean on the testimony he's already given, lean on the press conference that he gave, and what the rest of the Fed's been saying is we're going to watch and wait. We've cut rates now. We think we're in a good place. We've got accommodative policies in place. And so for the risks that we can quantify, this is where we are. Then he went on to say, in response to questions, we can't really quantify the risks from trade, but we know it's an issue.
Yeah, exactly. We looked at the effects of trade. We're not giving advice on trade. One of the things that struck me about it, Mike, was, in fact, he talked more about fiscal than normally you hear the Fed chair talk about fiscal, and specifically saying that we may need fiscal help at some point, but we've borrowed so much money, I'm not sure it'll be there.
Yeah, that's an important point that has only recently started to be talked about. A lot of central bankers, Mario Draghi in his last couple of press conferences, made a big deal out of we're going going to need fiscal help because rates are so low. Powell noted rates are so low in the United States, we can't cut them far in recession. And so fiscal help would be great. But what hasn't been said is very few countries are able to give it because of their either debt or legal situations in the United States. The amount of debt we have and the political process we go through means fiscal help is going to be very difficult to do. And he suggested that, we're not going to tell you how to do it, but get your fiscal house in order because we may need the assistance.
They also dragged him into China a bit. And we had Senator Cotton saying, do we really believe these numbers from China? I thought his response was interesting.
It was interesting because they generally haven't gone on the record about it. Nobody believes the Chinese economic statistics, but Powell was a little more specific about why. He noted the fact that the Chinese statistics have gotten a lot less volatile, which suggests that they are being managed. And he said, we look at the numbers because it's all we have, but you have to take them with a grain of salt. And he said, we just deal with the China that we have, not the one we'd like it to be.
Okay, Michael McKee, thank you so much for joining us today. We're going to go right to the White House right now because President Trump is speaking with President Erdogan of Turkey.
Only for the oil. And I have to just finish by saying that the President and I we've been very good friends. We've been friends for a long time, almost from day one. And we understand each other's country. We understand where we're coming from. I understand the problems that they've had, including many people from Turkey being killed in the area that we're talking about. And he has to do something about that also. It's not a one-way street. So I just want to say it's a great honor to have you both, and thank you very much. Thank you.
Thank you.
You go ahead, please.
Sizinle yapmış olduğumuz görüşler çok gurur duyuyorum gerçekten. Bu her şeyden çok sınırlarımızdaki ateşe sürekli çok teşekkürler. Siz de çok dostumuz var. Siz ve şahsınızla şu anda o sınırlar çok uzun. 7 bin kilometre uzaktan bir sınır ödediklerimiz çok uzaktan. Dolayısıyla herkesin kendisi var.
Once again, we're listening to President Trump with President Erdogan in the White House. This happened moments ago, and this is on tape playback right now. Right now, we're listening for a translation. We're waiting for a translation of what President Trump just said for President Erdogan for his response.
Thank you. Sayın Başkan, zaten biraz sonra çok geniş detay basın toplantısı yapacağız. O bakımdan tekrar burada herhangi bir ifade kullanmama gerek yok. Basın toplantısında etraflıca her şeyi anlatacağım.
Well, Mr. President, thank you. In a few moments, we shall be having a larger scale press meeting. That's why I don't feel the need to come up with longer statements here.
Thank you.
Okay, well, it's true. A lot of truth to that. I will say we're also talking about a trade deal. We do proportionately very little trade with Turkey. They make great product. We make the greatest product in the world, and frankly, we're going to be expanding our trade relationship very significantly. We think we can be doing $100 billion with Turkey, and right now we're doing about $20 billion. But we think that number should be easily $100 billion, which would be great for Turkey and good for us. So we're going to be expanding. We have our people from Commerce here. That's one of the meetings we'll be having. And having that big relationship, I think, is a very good one. So we think we can bring trade up very quickly to about $100 billion between our countries. Okay?
Okay, we'll continue to monitor that as it develops. As we know, there's going to be a news conference between the two presidents, President Trump and President Erdogan, later on this afternoon. In the meantime, let's bring in Terry Haynes. He's the founder of Pangea Policy. So, boy, there's a cornucopia today about what we can talk about. Let's pick up on Turkey just for a moment before we go back to Jay Powell and his testimony. What is on the agenda? You just heard President Trump say part of it is trade. He wants a trade agreement where we get more trade with them. Right. They also have that little pesky thing that's a Russian missile.
Well, there's a lot of pesky things going on there. There are two sorts of things happening right now, David. One is the Turkish proposal to purchase a Russian missile system. The other one is the deal between the United States and Turkey to permit limited incursions into Syria territory, and the concerns about whether or not that is exposing the Kurdish people and Kurdish military to difficulties, and also opening up another front potentially for ISIL.
This is clearly a priority for President Trump, the U.S.-Turkish relationship. Yes. He's having President Erdogan in the White House. We understand why President Erdogan wants this, because he's got some divisions back in Turkey. He wants to send a message. Who's on President Trump's side at this point? Because the Congress, to some extent, is united almost, Republicans and Democrats, saying we've got real problems with Turkey. We're not as enthusiastic.
Right. Well, that's the right question to ask. And again, it runs into the Russian problem that seems to to bedevil this administration on many fronts. What you've got is a situation where the Trump administration has done a very poor job of explaining exactly why the change in policy and what the potential benefits are for the United States. What it sounds like at first blush, not suggesting this is what it is, but what it sounds like is a different and a little bit more of a United States disengagement from an area in the Middle East that is not a prime concern of United States policy overall. But there's an awful lot of dissension, as you say, both in the Congress and I think beyond, even in the Middle East itself, about whether that's the case. So I think they've got a lot of explaining to do, and there's a lot of pressure coming from Congress to actually sanction Turkey over at least one or more of these issues.
Okay, so let's go back for a moment, if we can, to Jay Powell's testimony, the Fed chair that we've been watching extensively this morning. And he didn't say much about monetary policy, saying if things keep going well, then we're in a good place. But one of the issues really that has come up, including in Jay Powell's testimony, was what about the trade uncertainties? What's that doing to the economy?
Sure.
And what's this issue with China? We heard from President Trump yesterday about the China trade deal. And one of the issues that came up is, do we know how strong the Chinese economy is? This is in part what was said about the Chinese numbers.
I certainly feel that it's very hard to understand China. You know, you can read all you want, you can visit it all the time, but nonetheless, it's still very hard, I think, for me anyway, to really feel like you understand the way the economy works, the way the society works. So I think that I think you have to, as a general matter, just accept that it's really hard to know.
So Terry, it's very hard to know what the Chinese situation is. President Trump tells us they really are struggling and that he has the upper hand in the U.S.-China trade negotiation. Do we have a read on the relative strengths of the two parties in that dispute?
The short answer is no, I don't think we do. But the assumption, and personally I think it's a reasonable assumption, it's one that a lot of people make, is that whatever the Chinese are telling you, you should probably shave off an additional percentage, and because what they're going to do is they're going to underestimate. Firstly, secondly, the amount of state support, state direct injection, all the rest actually compounds those problems and makes them more acute. So, I think the president's probably onto something when he says that China feels like it's hurting and it needs to do something.
What about fiscal stimulus, to change the subject, but within Jay Powell's testimony here? Because we heard him ask about that. In fact, in his opening remarks, he said, I'm concerned that if we get a recession, we get a downturn, we don't have the ability, because we've borrowed so much money, to really have fiscal stimulus. At the same time, there's talk, as I understand it, in Washington, of a possible tax cut, middle-class tax cut, going into the election year.
Sure, and I think Powell's exactly right on that front, and particularly in the sense that there isn't a lot more room. Firstly, and secondly, as you point out, the talk of doing another tax cut, I think, frankly, it's real, but it's just that. It's being done not only for elections, but understand the constraints that would exist in the Congress. The reason why we got a tax cut in 2017 fundamentally was there was a deal to increase the deficit by $1.5 trillion over 10 years. You're not going to find that in this constrained situation we're in now to be able to do that again.
And that's such an important point, because fine, the White House might talk about a tax cut as a practical matter. Are they going to get the Democrats to agree to a tax cut at this point going into election year?
No, certainly not.
So this is really more electioneering than it is actual substantive policy.
Oh, I think absolutely. 99.9% electioneering, I think.
Okay, thanks so much to Terry Haynes. He's going to remain to us. He's the founder of Pangea Policy. Coming up, the Fed Chair Jay Powell was not the only witness on Capitol Hill this morning. The first impeachment hearings kicked off today. Those are the public hearings. What have we learned from investor Bill Taylor's testimony? That's coming up next. This is Balance of Power. We're on Bloomberg Television and on radio.
Just because you travel doesn't mean you can't keep your routine. The more obstacles travel puts between us and our well-being, the more we strive to work well. At Westin Hotels and Resorts, we're focused on empowering your well-being. With Westin meetings, you work and feel your best with nutritious snacks and nourishing smoothies that give you the energy you need to power through any meeting. Don't leave your well-being behind. We give you the choice to get up or to rise. Search Westin online to find out more. Westin, let's rise.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Hiya. Oh, give me one of your chicken selects.
No.
Please, I've done my backing again.
You seemed totally fine when you walked.
And my boyfriend split up with me. Came home to find him with my sister.
Didn't know you had a sister. Is there anything I can do?
One of your chicken selects will cheer me up.
Tender chicken breast strips seasoned with a crispy coating. Chicken selects from McDonald's. Get your own.
Come on, please give me one.
Served after 10:30 a.m., except in selected restaurants, which will serve this from 11 a.m.
What if, instead of browsing the World Wide Web, we were all browsing GopherNet?
Gopher is easy to navigate and easy to browse.
Because in the early 90s,
Gopher was taking off faster.
Until they made one crucial mistake.
At that point, Gopher traffic on the internet dropped off.
Find out why open source won the battle for the internet next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Pascal gobbles up the rebound and slammed it down.
Get your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium. Upgrade today.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Hey, NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet and scores us down.
The top of the Big 12 is at stake. Reigning champion Oklahoma travels to Waco, Texas to take on the surprising undefeated Baylor Bears. The action kicks off this Saturday at 7:30 p.m. Eastern. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
And so for the next several weeks, and really for the past couple of months, so much of the dominant national political press discourse will be about the impeachment inquiry and then likely the articles of impeachment that are brought forward. Beyond that, I think from a broader perspective, however, the president's still very much aligned with Republicans and not in danger of losing support as of now.
Okay, Kevin, great reporting. Thank you so much. That's our chief Washington correspondent, Kevin Cerulli. He's up on Capitol Hill outside the hearing room where they're having those impeachment hearings. We're back now with Terry Haynes. He's the founder of Pangea Policy. So put this in perspective. When we first heard about this, first of all, Nancy Pelosi, the speaker, didn't really want to do it at all. Then when she said she wanted to do it, they were going to try to get it done by the end of the year. Do they have a prospect of getting this all wrapped up?
No. I don't think so. You look at just look at the calendar. We have one more full week before Thanksgiving recess. There's no talk of getting rid of recesses. You've got 3 weeks or so before a Christmas recess after that. I don't see how they possibly wrap this up and do anything other than just bucket along. I mean, Democrats have 3 problems right now, and I thought your point about the context here was a very important one that needs to be taken to heart, and I don't have to repeat. But Pelosi wants to talk about an ironclad standard. They don't have it yet. They want to talk about process, and Republicans have a point in talking about process here. Not being allowed to question witnesses, understand who or what things are, and what the evidence is a big deal. It's a big deal on Capitol Hill generally, and something that's unique. It doesn't happen like this in any other hearing in any other context, and so they're right to bring that up. Thirdly, what you've got is a whistleblower problem. The person or the event that started all this is all of a sudden nowhere to be found, and that's going to need to be rectified before anything happens. What this sounded like to me, based on listening to this morning, was criminalizing a policy dispute. It's not the first time that will have ever happened, but at the same time, that is not going to be able to convince the public or make a bipartisan push for impeachment successful.
What is the goal of the Democrats? What's the strategy here? I mean, I understand it's an impeachment process, but hardly anybody seems to think there'll actually be a vote in the Senate to remove President Trump from office. Well,
that's a good question. The evidence, I think, the idea, I think, is to push as much evidence as possible to make the best circumstantial case possible, and at the same time hope that they get corroboration from one or more witnesses that have firsthand knowledge. Because, again, as you pointed out, I think accurately, there's very little or none of that right now. And the other thing I would point out here is very simply that in the 2 impeachments that we can both remember, what you have is a world where the president's state of mind himself was known. By the end of the process, we understood what Nixon actually did and thought. By the end of the process, we understood what Clinton did and thought. We're nowhere near close to that today. That alone augurs for a very long process.
We're talking with Terry Haynes. He's the founder of Pangea Policy. And we're talking about those impeachment hearings that are ongoing on Capitol Hill right now. At the same time, one of the things we don't have, including in the 2 impeachments that you and I both remember, is an impeachment process during an election year. At some point, don't they have to get this behind them so that some of the people who would be sitting in the trial, the senators, can go out and campaign in the primary?
Well, they do. And there's one of the things that's been pointed out by Bloomberg and other media outlets is that a lot of those sitting senators will end up sitting and listening to evidence for quite a long time. The other thing I would urge people to watch out for, though, is what might go on in the Senate in terms of hearings themselves. I think Lindsey Graham, senator from South Carolina, head of the Judiciary Committee, said something important on Sunday when he said that if he doesn't get satisfaction, and a lot of people in the Senate don't get satisfaction about the witnesses and what's known and what's said in the proper context, that he is going to call witnesses himself and urge his other committee chairs to do the same. So what you may end up with is a world where the House denies Republicans the context that they seek on the Biden matter, the Burisma matter, everything else, but that may end up coming up in the Senate before there's even a trial.
What happens if, in fact, they do vote articles of impeachment and he is acquitted? President Trump is acquitted in the Senate. Who comes out stronger from that, President Trump or the Democrats? Can President Trump say, see, I'm innocent?
I think Trump will certainly say he's innocent. I think what ends up happening is that he's marginally strengthened in the battle for the White House. I think the Democrats are marginally weakened because they have such a small majority in the House, and their majority is actually made up of folks who won their seats in Trump districts, that they put themselves in more peril of losing that small majority of less than 20 seats that they have now. But it may redound to the Democrats' benefit during the presidential election, depending on the nominee. I mean, the biggest problem the president has is after 4 years of the Trump show, you might end up with Trump fatigue among many of the groups that made up his winning election coalition. If that happens, if people are just tired of this, depending on the Democratic nominee, that may help the Democrat and hurt Trump.
I wonder, it requires a 2/3 vote in the Senate. I wonder if they can get a 2/3 vote on almost anything. Because if you look at the polling right now in impeaching, actually it's close to 50% of the country think he should actually leave office. But then if you look below that, it's like 85-90% of the Republicans think shouldn't, and 85-90% of the Democrats think should, and the independents sort of break down roughly evenly. It feels like the country a bit.
Exactly. The one thing that's been pointed out, and I think accurately, is after 3 years of the Trump administration, we are in the public opinion polls exactly where we were 3 years ago. And that probably alone is good for the president. And the other thing I would say about the election generally is that for all the talk of Trump's relative unpopularity, there's no Democrat out there that's any more popular than Trump.
Yeah, you can't beat somebody with nobody, as I understand in politics. I was taught that early on. Okay, many thanks to Terry Haynes. He's the founder of Pangea Policy. And we're going to have more with Terry coming up at 1 o'clock this afternoon on Bloomberg Radio. And you can watch and listen to the full impeachment hearing on your terminal using the function Live Go. Coming up here, President Trump welcomes President Erdogan to the White House. Congress is, in the meantime, pushing for sanctions on Turkey. We discuss the dynamics of the White House visit next. This is Balance of Power on Bloomberg Television and on radio.
We could call it Bloomberg Awesome, but Bloomberg Best is accurate and less embarrassing to say.
Analysts are raising questions about rising competition and higher costs.
June Grazo and Ed Baxter.
It is the first company to go public in the space tourism industry.
Bloomberg Best.
That was AutoNation CEO Cheryl Miller.
Weekday evenings at 5 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Hey, it's me, your cell phone. We need to talk about something serious. I know you love me, I know you like using me wherever you are, but I feel like this isn't working out when you're driving. I know you may think that it's possible to focus both on me and the road, but I just don't feel the same way. I think we should spend time away from each other when you're driving. It's for the best.
Visit StopTextStopWrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
This is Balance of Power on Bloomberg Television and on radio. I'm David Weston. President Trump is hosting Turkey's President Erdogan at the White House today, even as we speak. In fact, they're up there. This is the first meeting of the two leaders since Erdogan's military offensive into northern Syria, and comes as Congress is pushing for sanctions on Turkey. Bill Ferries, who leads Bloomberg's national security coverage in Washington, he joins us now with the latest. So, Bill, thank you so much for joining us. Give us a sense of what's on the agenda between these two presidents today.
Well, there's quite a bit that Turkey would like from President Trump, and there's a few things President Trump would like from President Erdogan. But the biggest issue on their plates today is Turkey's purchase of a Russian missile defense system, the S-400, that prompted the U.S. to kick Turkey out of the F-35 jet program. Turkey is obviously a NATO member, has the second biggest military in NATO, and was expected to be buying about 100 of the Lockheed Martin F-35s. That is all on hold now as the U.S. and Turkey sort out whether Turkey will continue to purchase and to later this year deploy and activate that Russian missile defense system.
So Bill, give us a sense of where that is, because I mistakenly, I guess, thought that horse was out of the barn. We had Ambassador Kay Bailey Hutchinson, our ambassador to NATO here recently, who said that she thinks they can still put it back together again. I thought they actually had bought the S-400s and they were deploying them already. Is that wrong?
No, that's right. They've received most of the S-400s. We don't believe they've necessarily gotten all the missiles in that system yet. So it's not deployed. It's not activated. The Pentagon has said they expect Turkey to be activating that fully by the end of this year. So it's very close. We're talking about a matter of weeks. There is still time in theory for, I suppose, Turkey to send that back to Moscow and to start over with the U.S. and its Patriot missile defense system. But that will be the biggest item the two presidents are probably discussing today.
Well, and Bill, is there really room for maneuver for either presidents on that? Because for President Erdogan to say we're going to pack him up and ship him back, boy, that would be a big step down for him on a position he's taken very strongly. On the other hand, I'm not sure that President Trump can get it past Congress if he has anything less than that.
Right. I think you're spot on. President Erdogan has repeatedly said that is a done deal, that he has bought the S-400 and that's it, that he's still very much interested in potentially buying some Patriot missiles. In the past, he's demanded a technology transfer to come with those Patriots that the U.S. has not been willing to provide. So that'll be one of the key questions coming out of this meeting if they do, in fact, reach an agreement on Patriots is what else is coming with it. But I think you're right. It would be President Erdogan has reached out to Russia. He's become closer to Vladimir Putin. He does not want to cut that relationship off. It's going to be very hard for him to thread this needle of keeping an S-400 and trying to convince the president that he should get F-35s. But President Trump is known to make some unexpected decisions, so that's what people will be watching for at their press conference this afternoon.
President Trump is also known to like deals. You know the book, The Art of the Deal. He's also bringing into this trade with Turkey. Is it possible that cold hard cash could get us past this problem?
That's always part of it. President Trump said at one point, I think last month, that the U.S. had been working on some sort of a free trade agreement with Turkey. That will be another big issue we'll be looking to hear about today. He has also placed steel tariffs on imports of Turkish steel. That's not a major, the U.S. is not a major purchaser of Turkish steel, but it's the kind of thing that President Erdogan and his pretty beleaguered economy could really use at this point.
Okay, many thanks to Bloomberg's Bill Ferries reporting from Washington. Always great to have Bill with us. And stay tuned for a joint news conference between President Trump and President Erdogan. That's going to be coming up at 3 o'clock this afternoon Eastern Time. Also, I had an exclusive interview with the San Francisco Fed President Mary Daly. That's going to be coming up at 2:30 this afternoon Eastern Time. Coming up on Balance of Power, we're going to be continuing on Bloomberg Radio in our second hour. We have a lot to cover here. We're going to keep Terry Haynes of Pangea Policy with us. We have, of course, an impeachment hearing going on. We have the testimony from Jay Powell, the Fed chair, and we have the meeting between President Erdogan and President Trump all at the same time, in addition to Mary Daly. How much more can you want? Live from New York, this is Balance of Power. We're on Bloomberg Television and we're on radio.
This is a Bloomberg Pursuits look at luxury. It doesn't matter if you're naughty or nice. To spend some time with Santa Claus at Harrods, you also have to have some deep pockets. London's famed department store is limiting 10-minute visits to its Swarovski crystal-encrusted Christmas grotto to families who have spent at least $2,500 with the store. Meanwhile, on this side of the Atlantic, the U.S.'s historic economic expansion has so enriched one-percenters they now hold almost as much wealth as the middle and upper middle classes combined, about $36.9 trillion. Speaking of billionaires, it's come to light that WeWork co-founder Adam Newman's family office explored a bid for Barney's New York during its recent bankruptcy, according to people familiar with the matter. Had he been successful, Newman would have added retail to his investments in accommodation and co-working provider Selena, UK energy startup Faraday Grid, and anti-aging startup Life Biosciences. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
Full breakfast, cup of coffee, whatever you have in the morning, have it at daybreak.
What's the outlook for the pound if there is another election?
Nathan Hager.
The U.S. could still delay those tariffs?
And Karen Moscow.
It is the fifth major industry player to make some sort of zero commission offer.
Bloomberg Daybreak.
Bloomberg has more from Hong Kong.
Weekdays at 5 a.m. Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Welcome back to the Dog Show. Up next, we have Satchmo. Satchmo is a member of the Shelter Pet Group.
That's right, a group known especially for their couch-snuggling, ball-chasing, face-licking, and, of course, companionship. Now, let's see him in action. Look how he makes eye contact with his person. That's actually known as the treat stare.
How intuitive, and now he appears to be excitedly turning in circles.
The happy dance will come in with this group.
But really, the best way to know an amazing shelter pet like Satchmo is to meet one.
Visit theshelterpetproject.org today. Adopt.
Brought to you by Maddie's Fund, the Humane Society of the United States, and the Ad Council.
Why has J.D. Power ranked Commonwealth Financial Network #1 in independent advisor satisfaction among financial investment firms for the 6th straight time? We think it comes down to one thing: you. Because it's your input and feedback that keeps us focused on what's most important to you and your clients and continually pushes us to be the best we can be. Maybe that's why we receive top marks in every category of the J.D. Power 2019 Advisor Satisfaction Survey. They named us #1 in client support, #1 in firm leadership, #1 in operational support, #1 in compensation, #1 in professional development support, and #1 in technology support. Ready to partner with the best? Call Commonwealth at 866-462-3638 or visit commonwealth.com and feel the power. Member FINRA/SIPC, a registered investment advisor. For 2019 J.D. Power award information, visit jdpower.com/awards.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio.
From Bloomberg World Headquarters in New York, I'm Doug Krisner. The U.S. equity market right now hovering near all-time highs. This morning, we heard from Fed Chair Jay Powell. He was talking about the current stance of monetary policy being sufficient, likely, provided the economy does stay on track, although he did warn of noteworthy risk remaining. And today's reading on October retail inflation was kind of mixed. Headline CPA was above forecast. However, the core rate on CPI fell short of estimates on a year-over-year basis. And then when you look at it on a month-over-month basis, it basically matched expectations. Rents were up the least since 2011. Meantime, rents for hotels and motel rooms fell the most on record. Right now, in the bond market, 10-year Treasury down by nearly 5 basis points in yield. We're at 1.88%. In the equity market, Dow Industrial Average is higher by 0.3%. S&P better by 0.2%. And the NASDAQ Composite is higher by just 0.1%. The education software company Instructure is exploring strategic options, including a possible sale. Stock is up about 4% right now. Shares in Canada Goose Holdings down 10%. The company saying that the unrest in Hong Kong is hurting its business there. Shares in Nike up 1%. Company is breaking up with Amazon. The athletic brand will stop selling sneakers and apparel directly on the Amazon website. For its part, shares in Amazon are down about 0.9%. And the private equity firm Apollo Global Management is buying Tech Data Corporation. Price tag on this deal is $4.6 billion. That's roughly $130 per share. You are caught up on markets. Let's get back to the balance of power and David Weston.
But first, this is Dave Wilson with your Market Drivers Report, focusing on American depository receipts. ADRs are lower, unlike U.S. shares. The S&P ADR index is down 0.1%, while the S&P 500 is up 0.2%. China's Alibaba Group Holding has fallen 2.3% in U.S. trading after falling for a Hong Kong stock sale. Terms obtained by Bloomberg show the online retailer is offering 500 million shares. That's more than $11 billion of stock at yesterday's closing price for the ADRs. Canada Goose Holdings has fallen 13%. The coat maker left fiscal year forecasts unchanged, even though second quarter results beat analyst average estimates in the Bloomberg survey. Canada Goose said wholesale revenue will drop this quarter, and protests in Hong Kong have hurt business there. Now, Japan's line has climbed almost 23.5%. The mobile messaging service is in final talks to merge with the SoftBank-controlled company Z Holdings, which owns Yahoo Japan. That's according to the news service Nikkei. And China's Luckin Coffee has risen 13.5%. The coffee shop chain posted a narrower third quarter loss and higher sales than analysts expected. Luckin benefited from the introduction of its own teas during the quarter.
All right, thanks to Dave Wilson. In spite of the fact that long-term interest rates are down today, the dollar has strengthened for the 7th time in 8 sessions. We've got the Bloomberg Dollar Spot Index higher by 0.1% right now, the highest level in a month. Now we can get back to Balance of Power and David Weston.
This is Balance of Power.
We have the strongest economy by far in the world.
We're going to grow our trade relationship.
I know what's broken. I know how to fix it.
Where the world of politics meets the world of business.
They've got the money they need to run a very competitive race.
We've got now a real crunch few days for Brexit.
We want certainty in the markets. We want certainty in our trading relationships.
The administration is trying to create a new divided world.
Balance of Power with David Weston on Bloomberg Radio.
Hearings, public impeachment hearings are underway. President Trump meets at the White House with Turkish President Erdogan, and Chair Powell gets to tell Congress his side of the Fed's monetary policy. From the Bloomberg Interactive Broker Studio, welcome to the second hour of Balance of Power. We heard from Fed Chair Jay Powell at some length this morning before the Joint Economic Committee, and one of the things that they addressed was trade uncertainty. He said he didn't want to take a position on trade policy, but certainly he could see some of the effects in the economy. For more on that, welcome now Terry Haynes, who is still with us from Pangea Policy. He is the founder of that organization. So we heard a fair amount about trade policy. Yesterday we heard from the President of the United States in his remarks to the Economic Council of New York. Did we get much certainty out of President Trump?
I think we got no more certainty than we'd had before, frankly. The speech itself was a non-event. And I don't mean to disparage by saying that. They're in the middle of negotiations. They've said that the negotiations would continue for a period of weeks. I'd look for it based on prior timelines to wrap up probably in the next couple of weeks or so. But until then, you don't have a real sense of where this is going or what will be included. What you do know, I think, though, is that you're about to see a major point of departure here. Either there is a phase one trade deal that is meaningful, and by meaningful I mean one that is enforceable, or there isn't. And if there is, then markets can feel justified in thinking that the rest of the trade issues can ultimately get wrapped up at some point, although it won't be quickly. If not, then we're going to have a trade cold peace and continued tariffs for quite a while.
Have we ever had a truly enforceable trade deal with China?
No, we haven't.
Because WTO was a trade deal and some things never got done.
Right. One thing that is concerning to me about this is that China across the board, whether on trade, and as you rightly point out, WTO is an example of this, whether it be with the United States, whether it be with the WTO, whether it be even with Hong Kong, where there are treaty obligations, South China Sea matters, all of these are attacked by China as a matter of damaging sovereignty. In other words, if you don't, we can't possibly agree to your terms and conditions because it damages our sovereignty. Well, if that's the case, I don't want to be too dramatic about this, but if that's the case, you're looking at a rogue nation, because every country across the globe does deals, trade or otherwise, based on enforceability. So if we have a nation out there that's powerful and doesn't want to have any enforceable deals, that is a big problem.
Can we just muddle through, as it were? I mean, because companies realign their supply chains, people adjust and things like that. Do we really just need to sort of realize this may be chronic? This is not something that's going to get fixed.
Yes.
Simply put.
Yes.
What effect does that have on the economy, though?
Even in the best case, this is not going to go away for a while.
But does that suppress U.S. growth?
It's clearly going to have a negative impact. The impact, I think, is the estimated impacts are all over the board. You see 1%, you see 0.5%, but what you do know is that it's going to have a damaging and settling impact on growth overall.
Okay, it's not just China trade that's uncertain right now. We also have the USMCA, the successor to NAFTA, that still has yet to be ratified. This is what President Trump had to say about that yesterday in his speech up here in New York.
Democrats in Washington would rather pursue outrageous hoaxes and delusional witch hunts, which are going absolutely nowhere, don't worry about it, than pass the USMCA and deliver real stuff for the American workers.
So, Terry, I talked to Nancy Pelosi just about a week ago, and she said she wants to get it done. She wants to get USMCA done. It's a matter of enforcement. She thinks it will get done. Will it?
Yeah, I think it will. Excellent interview, by the way. I saw it. I do think it will. I think we're in the short strokes on this. Democrats want a variety of things addressed that are, I will call marginal, again, not to disparage, but they are marginal. They're about how to enforce their trade and environmental and labor and environmental protections. And those need to be addressed, and the administration knew that going in. The good news here, and I think the tiebreaker, is that Ambassador Lighthizer, the USTR, clearly has shown over the last year and a half that he has kept Congress up to date, up to speed, has been negotiating in good faith, and I think what you see in the end is action on USMCA.
Yeah, the one thing I at least hear consistently from Republicans and Democrats is respect for Ambassador Lighthizer. They're getting along with him quite well.
Yeah, and you can see that in public. It's shown every time he's up there.
But beyond Jay Powell's testimony up on Capitol Hill, we had something else going on today, and still goes on, and which those are impeachment hearings. Could that get in the way of the USMCA ratification? Can Congress walk and chew gum at the same time?
In this case, I think it can. It's a truism, as you know, to say that they can't. But I think an awful lot of things go on and have gone on in prior impeachments while impeachments themselves were going on. Both in the Nixon and Clinton administrations, you got an awful lot of important policy matters that were put together and signed by the president. I think that'll continue. I think USMCA might slow down a little bit as a result of impeachment. I think it might slow down a little bit also if there is a standoff over government funding of some kind.
Well, that was going to be the next question. We've got appropriations. I mean, we raised the debt ceiling, but that's not enough. They've got to appropriate, and they haven't done that yet. Could we shut down the government? Because it's coming up later on this month.
I continue to think that it's likelier than not. If not on November 21st, which is the next tripwire, sometime right before Christmas, we might end up with another one of these things. That could be a small market negative, but the good news is that the markets are getting used to this. I mean, this is the third, fourth, fifth one of these that we've had, and much as I hate to use the phrase kabuki theater, I think it accurately describes it in this case.
And if history teaches us anything, it is that the markets react much more to the debt ceiling issue than they do to the appropriations. Because the possibility of the U.S. Actually reneging on paying its debt is much scarier than going without your mail for a couple of days.
Sure. Well, that's exactly right. And that issue's off the table until the beginning of the next administration, regardless of who the president is.
At the same time, we're about to have an election year. So is anything going to get done in Washington besides USMCA?
No, but that was the case beforehand.
Nothing's changed there. Okay, so much. Thank you so much to Terry Haynes of Pangea Policy. Great to have you with us in both hours, Terry. President Trump is holding talks with his Turkish counterpart, even as we speak right now. And one point of agreement may be the role of the so-called deep state in both countries. That's what Bloomberg Opinion's Eli Lake writes today on the Bloomberg. We're going to have him here. That's going to be Eli Lake from Bloomberg Opinion on Balance of Power on Bloomberg Radio.
Directors of companies are responsible to boards.
Let's begin with the IPO that may not be for a long, long time.
Politicians are mindful of voters.
Are those gains all going to the elite?
Scholars pay attention to data.
Does it spread beyond manufacturing?
And nearly everyone at the top of these professions listens to Bloomberg Surveillance.
Everybody listens when I'm on your show.
Tom Keene and Jonathan Farrow. Weekday mornings at 7 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
If
if you love them enough to listen to them practice the same song on tuba. Please be done. Over and over and over and over and over. Then surely you'll check NHTSA.gov/the right seat to make sure they're correctly buckled in the back seat.
Sounds good, honey.
Check today at NHTSA.gov/the right seat. Brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Join us in New York City on November 21st as Bloomberg Pursuits convenes the second annual The Year Ahead Luxury. Speakers include Jennifer Hyman, CEO Rent the Runway, Alessandro Bogliolo, CEO Tiffany & Company, Robert A.M. Stern, renowned architect. Supporting sponsor, Diamond Producers Association. Participating sponsor, St. Regis Hotels and Resorts. For more information, go to BloombergLive.com/TYA Luxury. Invitation code RADIO.
3, 2, 1. Oh no. Which button am I?
When every second counts, you can't wing it.
Guys, a little help up here?
In a home fire, you may have less than 2 minutes to get out. So make a family home fire escape plan. Then practice home fire drills at least twice a year so everyone knows what to do when they hear. Prepare your family at ready.gov/fire drill. Brought to you by FEMA, the Ad Council, and
Next. Nah. Nope. Boring. If you skip through loads of your TV channels, why are you paying loads of money for them? With TalkTalk TV and Faster Fibre, you can access the nation's favourite TV shows, a world of films and sport, live and on demand, all for £25.95 a month for 18 months. And if you're quick, you'll even get a year of Amazon Prime on us. Search TalkTalk TV. TalkTalk. For everyone. Offer ends 5th of December, subject to availability. T's and C's apply.
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
For the independent bookseller who found you that first edition.
For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
At Asda this Christmas, treat them to a gift or two, or 3. With 3 for 2 on a wide range of beauty and toiletry gift sets. From Dove, Lynx, Bayliss and Harding and many more. Asda, let's make Christmas extra special. Selected stores and lines subject to availability. Individual prices £1 to £20. Cheapest item free.
If your ideas challenge the status quo, if you have advised people you had no right advising, if you built companies and lost companies and built them again, if you've been called a pillock, a dreamer, an innovator and a genius, if you thrive in the 11th hour, if you have blown it and completely nailed it in the same day, prepare for your next departure.
Do business right. Travel Virgin Atlantic.
No one wants to wait and wait and wait for that perfect phone. Thankfully, the Tesco Mobile Black Friday event has started already. You can find loads of brilliant phone and SIM deals with low monthly prices and big savings, including time-limited weekly deals. Tesco Mobile's best ever Black Friday event is on. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products and length of promotional period. See tescomobile.com/terms.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
Right now, the U.S. equity market is hovering very near all-time highs. This morning, we heard from Fed Chair Jay Powell, who said the current state of monetary policy is likely to be sufficient provided the economy stays on track. He also warned of noteworthy risk remaining. And we also had the read for October on retail inflation. Kind of a mixed bag here. Headline CPI was above forecast. However, the core rate fell short of consensus when you look at it on a year-over-year basis. And then when you look at it month over month, it just matched expectations. Here's an example. Rents up the least amount in October since 2011. And if you look at rates for hotels and motel rooms, they were down the most on record. So it looks like the interest rate environment should be positive for the equity situation, and right now the Dow is holding on to a gain of 0.3%. S&P 500 better by 0.1%. Similar gain for the NASDAQ composite. The education software company Instructure is reporting strategic options, or exploring them, I should say, including a possible sale. Those shares are up 4%. Canada Goose Holdings down more than 10% of this hour. The company said that unrest in Hong Kong is hurting its business in Asia. We have Nike breaking up with Amazon. Nike shares right now higher by 1% after the company said it would stop selling sneakers and apparel directly on the Amazon website. For their part, shares at Amazon down 0.9%. That's a look at markets. Let's get back to the balance of power. I'm David Weston.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It's time now for Bloomberg Opinion from the Interactive Broker Studio in New York. I'm David Weston, and we welcome now columnist Eli Lake. Eli has a piece out on Bloomberg today. The headline is, Erdogan joins Trump's battle against the deep state. So, Eli, even as the two leaders are meeting as we speak, give us a compare and contrast. Where do these two leaders overlap?
Well, I think that they overlap in the sense that we've not really had presidents that have taken this, fairly dim view of the entire national security state that Trump has, that believes that it is sort of arrayed against him as an institution that actually crosses several agencies. But this is quite common in Turkish politics. There have been military coups in Turkish politics, and Erdogan, in his presidency, has taken steps. He has purged the top officers of his military twice. He has conducted other kinds of purges after a 2016 coup that were attributed to rival Islamist factions, followers of Fethullah Gulen. So on his, before departing for Washington this week, Erdogan told reporters that he believed that Trump wanted a good relationship with Turkey, but he was being sabotaged, I'm sort of paraphrasing here, by elements of the bureaucracy and Congress. And the point of my column is that that's not very good news for the long-term health of the U.S.-Turkey relationship, particularly if Erdogan remains in charge, because those institutions represent a kind of bipartisan consensus that Turkey has been a duplicitous fake friend and not a good ally. And there are several areas in which it has done so. Most sort of obvious would be Erdogan's invasion of northern Syria last month. But we can also point to his purchase of the Russian air defense system, his at times taking and at times release of Americans and Europeans as effectively hostages, his policy of sort of allowing refugees to migrate illegally to Europe. The list goes on, and we haven't even talked about his own assault on sort of democratic institutions in Turkey itself. All of this, I think, is going to be trouble for the medium-term, long-term relationship between the United States and Turkey, even if Trump ends up sort of coming up with some sort of bargain or deal with Erdogan on this particular visit.
Eli, as you point out in your piece, Turkey has had something, I don't know if you call it a deep state or not, but the military has been very powerful in civil society, not just in the armed forces over there in Turkey for some time. President Erdogan appears to have sought to dismantle that, particularly in the wake of the coup attempt, as he calls it. Has he been successful? Has he dismantled a lot of his own deep state, as he might call it?
Well, it's a mixed record in some ways. He has been successful, certainly, in getting military leadership that will implement and agree with what his particular policies. He's certainly been successful in longer-term policy to overturn some of the what were perceived as anti-Islamic policies that had been the rule of law in Turkey for almost 100 years that began under Ataturk. He was not successful, however, this spring when his party, the AKP, lost local elections in Istanbul and Ankara. And then when he called for a redo election in Istanbul, which is extremely important for patronage, his party lost again. And that, I think, does tell us that there is an element of the Turkish population that is fed up with Erdogan. And we've seen signs of that since the crackdown in Gezi Park in 2012. And I think you're seeing more and more of it. Erdogan has isolated Turkey in a lot of ways from the kinds of allies from Europe and America that many Turks see themselves as being part of the West. And in that respect, I think, Erdogan does have pushback from within the population, though I do think that he has tamed the military.
As we are talking, President Erdogan is meeting with President Trump at the White House. They're going to have a news conference at 3 o'clock Eastern Time. You raised the issue of the Russian missiles, those S-400s. Does President Trump think he can get around Congress on this? Is he or President Erdogan underestimating Congress? Or does he actually think he can get President Erdogan to back down?
Well, we know that Trump believes that almost everything, in foreign policy, and for that matter, all policy is negotiable. And he has had a plan that he has tried to spare Turkey from the economic sanctions by law that are required to be imposed on it from a 2017 law about significant purchases of Russian military equipment from an ally like Turkey. So he's delayed implementing those sanctions, and his plan is to try to get the Turks to dismantle the S-400 air defense system and purchase Patriot missiles that are compatible with NATO hardware. So far, Erdogan has not agreed. He's doubled down, and he has even said he wants to buy more from the Russians. It's fairly significant. He's been able to do that without experiencing the consequence of sanctions, though. For now, at least, the Pentagon has cut Turkey out of its F-35 program, which is at least one penalty that has been paid. But in my view, it's too weak a penalty given the severity of what Erdogan has done with these Russian purchases.
Okay, Eli, thank you so much for being with us. That's Bloomberg Opinion's Eli Lake. You can read more on this and other stories from Bloomberg Opinion at Bloomberg.com/opinion and on the terminal by typing in OPIN-GO. Today marked the first day of the public phase of the impeachment hearings with testimony from the ranking U.S. diplomat in Ukraine and the number 3 official at the State Department. We talk with former federal prosecutor Jeffrey Kramer of the Berkeley Research Group about what we've learned so far. That's coming up on Balance of Power on Bloomberg Radio.
This is a Bloomberg Market Minute. U.S. stocks are posting gains. The Dow is up 66 points. S&P 500 up 4. The Nasdaq climbing 7 points. Google will be the next big tech company to get into finance. The search giant will offer checking accounts to consumers. The project will be rolled out next year. Tariffs increased on a number of Chinese-made consumer goods in September, but U.S. retailers haven't been in a hurry to pass the greater cost to consumers. Apparel prices fell in October by the most in 7 months. Overall, though, the cost of living, as measured by the Consumer Price Index, increased by a greater than expected 0.4%. And Disney has signed up 10 million customers since launching its new streaming video platform. Disney Plus just became available yesterday in the U.S. and Canada. Donna Wilson, Bloomberg Radio.
You're fierce. You take care of business and don't hold back. Taking care of your health shouldn't be any different. You know when something's off. Don't ignore symptoms like fatigue, joint pain, and rashes. Listen to your body. It could be lupus. We're here to help you take control. Learn how at BeFierceTakeControl.org. Brought to you by the Lupus Foundation of America and the Centers for Disease Control and Prevention.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Next. Nah. Nope. Boring. If you skip through loads of your TV channels, why are you paying loads of money for them? With TalkTalk TV and Faster Fibre, you can access the nation's favourite TV shows, a world of films and sport, live and on demand, all for £25.95 a month for 18 months. And if you're quick, you'll even get a year of Amazon Prime on us. Search TalkTalk TV. TalkTalk. For everyone. Offer ends 5th of December, subject to availability. T's and C's apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Cutting for the net. Scores! On the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Balance of Power with David Weston.
Coming up on Balance of Power, we talk with former federal prosecutor Jeffrey Kramer about what's going on in the public impeachment hearings. But first, let's get a market check with Doug Krisner.
David, we've been hovering in terms of the equity market at very near all-time highs throughout the day. Earlier in the session, we heard from Fed Chair Jay Powell, who said the current stance of monetary policy is likely to be sufficient provided the economy does stay on track. He warned of some noteworthy risk remaining. Read into that, the U.S.-China trade relationship. Today's reading on October retail inflation was mixed. Headline CPI above forecast. However, the core rate fell short of consensus on a year-over-year basis. And then when you look at it month over month, it just matched forecast. Right now, the U.S. 10-year Treasury down more than 5 basis points in yield. 1.88% is the yield on the U.S. 10-year. Right now, Dow Industrial Average up 0.3%. S&P 500 higher by 0.1%. Similar gain for the NASDAQ Composite. The education software company Instructure is exploring strategic options, including a possible sale. The stock is up 4% right now. Shares in Canada Goose Holdings down more than 10%. The company saying, among other things, the unrest in Hong Kong is hurting its business in Asia. Nike is breaking up with Amazon. The athletic brand will no longer begin selling sneakers and apparel directly on the Amazon website. Nike shares right now higher by 1%. However, Amazon is weaker by about 0.9%. In spite of the drop in long-term interest rates, we have a stronger dollar relative to the majors. The Bloomberg Dollar Spot Index is up 0.1%. You're caught up on markets. Let's get back to Balance of Power and David Weston.
Thank you so much to Doug Krisner. The House Intelligence Committee began the public phase of its impeachment inquiry today, calling witnesses it has already heard from behind closed doors, but this time in front of the American people. Welcome now Jeffrey Kramer, Managing Director of the Berkeley Research Group in Chicago. Mr. Kramer has extensive experience in white-collar criminal work, both on the defense side in private practice and as a federal prosecutor in New York and in Chicago. So, Jeffrey, thank you so much for joining us. We're getting some sense, I think, as we're following this testimony about at least part of what the Republicans will say, which is it all hearsay, that nobody talked directly to the president and had him say what he was trying to do with Ukraine. Is that right?
Well, I think that's one avenue they're pursuing. I mean, with these two initial witnesses, they're really just a piece of the puzzle. And Ambassador Taylor was involved in one call. Mr. Kent wasn't involved in any of the relevant calls. But they do bring certain facts to bear for the first time, as you indicated, in the public domain. So it's really fair points in cross-examination, and we've seen that from Republican counsel to indicate, what they did and did not see firsthand. However, there's going to be subsequent witnesses coming over the coming days and weeks that will fill in other gaps. So this is just, it's a mosaic, it's a piece of the puzzle, whatever analogy you want to use. But I think it's important the fact that for the first time, the American public are actually hearing these witnesses rather than just snippets from depositions behind closed doors.
Yeah, that's always so valuable. One thing that did come out today that I think caught people by surprise was another conversation a day after the one we had the transcript of. Apparently, the Ambassador Sondland, our ambassador to the EU, was on with President Trump, and an aide to our State Department official was on the phone call and reported back to him. This is what he said about that.
Ambassador Sondland called President Trump and told him of his meetings in Kyiv. The member of my staff could hear President Trump on the phone asking Ambassador Sondland about the investigations. Ambassador Sondland told President Trump the Ukrainians were ready to move forward.
So this is, of course, again, hearsay because it was an aide told him this, but assume the aide testified to that. How can we get inside President Trump's head about exactly what he intended or what his intent was in withholding funds from Ukraine?
Well, in any prosecutor, when argued to a jury, you can infer someone's intent by looking at their actions. That's how you know what someone intended to do. So here, you look at the president's actions, looking for a favor from Ukraine and holding up the money. Just those two data points alone, I think, give us some indication. The phone call that you referenced, I think, and again, public hearing about it for the first time, is going to be interesting when Ambassador Sondland testifies. He's had to change his version of events. Remember, he updated his testimony because he knew this was coming out. So it seems like Sondland, who's going to testify, I think, come clean, will be on one end of that conversation. So we won't have to guess what the president may or may not have said. Sondland will tell us, and the aide will also corroborate that, presumably, because they heard it. What's most interesting is, you have to laugh about this, but an ambassador called the president of the United States, I think in the middle of the night, on an unclassified cell phone in the middle of Ukraine, where everybody's listening. Clearly it was something important. You don't wake up the president for something that's not important.
Yeah, it's fascinating that happened. There's a lot of problems with that. At the same time, if in fact the Republicans keep saying it's all hearsay, we don't have the people who were in the room, does it play into the Democrats' hands? They say, okay, fine, we need those people who were in the room. We need John Bolton. We need the president himself. We need the vice president.
Yeah, Yeah, it's a great argument. You don't have these people. All right, bring them. No, we're not going to give them to you. Is it a perfect legal argument? Absolutely not. It's absurd. But in the court of public opinion, if you just keep hammering, well, we don't have the documents. Well, we don't have some of the people on the call, when the Republican administration, the Trump administration, is withholding that information. So you don't really have to dig too deep to see the fallacies of that argument. However, certain American people, American citizens who don't want to dig deep at all, they can just take at face value the fact that some documents weren't brought before the committee, the fact that some witnesses weren't brought before the committee, and that'll help them just corroborate their pre-existing beliefs.
Yeah, another line that the Republicans seem to be pursuing is, even if the president did say, I am going to hold up on meeting with President Zelensky or on aid unless you go forward with the investigation of corruption, there was nothing wrong with that, because one of the lines is the company Burisma that Vice President Biden's son was involved in had a reputation that was amended to by Mr. Kent of some corruption. He thought that maybe an investigation of it had been stopped because of bribes. Because if they can really establish that, doesn't that suggest that maybe the president can essentially demur on the whole thing and say, yes, sure, I did it, and it was appropriate because I was trying to get corruption investigated?
You're exactly right. I think that is a viable argument for the Republicans to make. Clearly, Hunter Biden is on that board for one reason: that his father was vice president at the time. That's not unique. You see, Ivanka Trump getting a lot of intellectual property consideration from China. The reason that's being happened is because she is the daughter of the president. So we see these iterations. So that is an absolutely legitimate point for the Republicans to bring up, and I think, as you indicated, does give the president an argument. If he says, absolutely, it was a quid pro quo, it was something I want to give the American taxpayer dollars to Ukraine, but that's not what the argument is. The argument is, there's nothing to see here. I wasn't holding anything up. So it really is, kind of the old prosecutorial chestnut. I didn't rob the bank, but if I did it, I was crazy. But if I crazy, there's other people with me. I mean, you're just moving and throwing whatever you can at the wall to see what sticks.
Put your old prosecutor hat right now. Do you think there's enough here to have probable cause, just probable cause, not a conviction, on actual crime? We understand it's high crimes and misdemeanors, which doesn't require an actual crime, but it might inform the discussion to know, would it have been a crime if the president did what they said he did?
The short answer is yes. And I'm talking to you from Chicago, where there's certainly a lot of corruption in Illinois, and we've seen several governors in Illinois be convicted by a federal jury for extorting campaign funds in exchange for favors or official acts. So if you take it out of the realm of the Oval Office and put it into any governor's office in the state, doesn't matter which one, these crimes not only, I think, give you the first blush probable cause, I think it gets you to a conviction.
And we have to bear in mind, this is essentially a process about whether there'll be an indictment, because the trial is over in the Senate. Does this put the Republicans at something in advantage, because they can really kick the tires on the Democrats' case long before they have to put on evidence in a real trial?
Absolutely. And you're right, that's how you view it, as kind of the grand jury indictment. The difference being that the Republicans, the opposition party to the impeachment proceedings, gets not only first crack at all the witnesses, they've got prior depositions, now they have live testimony with some cross-examinations.
And we've got a long way to go. Okay, thank you so much to Jeffrey Kramer of the Berkeley Research Group. Coming up here, what happens when big data meets your private health information? We talk Google and what it's learning about patients across the country. That's coming up next on Balance of Power on Bloomberg Radio.
Why do hedge funds and other alternative managers rely on Pershing? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's environment of market volatility, Pershing's Prime Services is well positioned to support the needs of hedge funds and other alternative investment managers. Whether it's customized financing or securities lending solutions, platform access, or business expansion, BNY Mellon's Pershing is a prime broker who's committed to this business and agile enough to meet your evolving demands. Pershing helps to solve the needs of clients by advocating for them, providing unwavering strength, deep supply, and award-winning service that is at the core of everything we do. Find out what sets Pershing's prime brokerage team apart.
Learn more about the unique and industry-leading solutions for hedge funds and other alternative managers offered by BNY Mellon's Pershing. Visit our website at Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet and scores us down.
The top of the Big 12 is at stake. Reigning champion Oklahoma travels to Waco, Texas to take on the surprising undefeated Baylor Bears. The action kicks off this Saturday at 7:30 p.m. Eastern. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane to the rim, throwing right corner three, another one.
TuneIn Premium brings you every minute of the NBA season, so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
Cook got a block. Cook into the end zone for the touchdown.
NFL fans, hear every live game on TuneIn Premium.
The snap. The kid Jones up the middle. Runs it back. He's to the 10 to the 5 to the end zone. Touchdown.
This Thursday, hear the home and away call as the Pittsburgh Steelers visit the Cleveland Browns at 8:20 p.m. Eastern.
Getting pressure again. Rolls to his right. Fakes. He's going to run with it. He's a 5. He got it.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
What if, instead of browsing the World Wide Web, we were all browsing GopherNet?
Gopher is easy to navigate and easy to browse.
Because in the early 90s,
Gopher was taking off faster.
Until they made one crucial mistake.
At that point, Gopher traffic on the internet dropped off.
Find out why open source won the battle for the internet next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Along the goal line, Martin scores! He takes it home!
hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Gonna move, hit a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today. And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and TikTok on Twitter. This is a Bloomberg Business Flash.
Now, the U.S. equity market has been hovering near all-time highs throughout the day. Earlier in the session, we heard from Fed Chair Jay Powell, who said the current stance of the Fed right now on monetary policy is likely to be sufficient, provided the U.S. economy does stay on track. He also warned of a noteworthy risk remaining. We also had the October reading on retail inflation earlier in the day. Kind of a mixed picture here. Headline CPI above forecast. However, the core rate fell short of consensus when you look at it on a year-over-year basis. And then when measuring it month over month, it was just in line with forecast. One of the reasons that we're seeing a drop today in long-term interest rates, 10-year Treasury is down by more than 5 basis points to a yield of 188. In the equity market, Dow Industrial Average holding on to a gain of 0.3%. In the broader market, S&P 500 higher by about 0.2%. The NASDAQ Composite holding on to a gain of just 0.1%. Nike is breaking up with Amazon. The athletic brand will stop selling sneakers and apparel directly on Amazon's website. Nike shares right now higher by 1%, although Amazon is down 0.9%. Canada Goose Holdings down more than 10% at this hour. The company saying that unrest in Hong Kong, one of the reasons that business in Asia is down. And word today that the private equity firm Apollo Global Management is buying Tech Data Corporation. Price tag on this deal, $4.6 billion. You're caught up on markets. Let's get back to the balance of power and David Weston.
Doug Krisner, thanks so much. Live from the Interactive Broker Studio, this is Balance of Power. I'm David Weston. Google says it's using patient data only to build search projects for a hospital network, but not for its own artificial intelligence research. The federal government, though, is reported taking its own look into why Google is using the data. Welcome now Garrett DeVenke of Bloomberg News, who's written a story on the subject. So, Garrett, first of all, explain, as I understand, Google admits they're using the data. The question is what they're using it for.
Yeah, I mean, it's been a pretty wild week for Google, and I think, they're probably feeling that maybe they messed up in terms of the messaging on this. I mean, there was a couple stories earlier in the week essentially saying that Google had done a deal with Ascension, which has, 2,500 hospitals in the Midwest. They serve millions of Americans and had sort of pulled in those Americans' data and were building tools off of it. And, a lot of people were really nervous about this. There was some tweets from senators. As you mentioned, the HHS is beginning an inquiry. And so, I finally got on the phone with Google last night and they said, look, we're not using any of this data to actually build AI algorithms. We're just using it to build, this some kind of search tools to help this hospital network search all its patients and kind of put that information in front of doctors and nurses. That's not to say, though, that Google isn't doing this kind of stuff with other hospital networks and in other clients around the world.
Listen, we can all make mistakes. Even Google can make a mistake. But they're making a big push into health. That's clearly a strategic area they want to move into. This is a sensitive area when it comes to patient information. There are federal statutes on this. We all have to sign things when we go to the doctor's office about use of our information. How could they have missed the fact that people would be really taking a look at that and they couldn't be ambiguous about what they're doing?
Yeah, I mean, I think so. Google definitely, they say they've signed everything they need to sign. The hospital network says it's all above board, but it's true. There's a ton of scrutiny against all the big tech companies right now. And Google, because we know as a data company that is sort of crunching numbers, figuring out ways to build better advertisements and make more money in other parts of their business, it's understandable why people were nervous about this. But it's true. Google is really getting into healthcare. They've hired a bunch of people. And I don't necessarily think that it's about advertising. I think they actually want to go and make money in healthcare for healthcare's sake. They want to build tools to be able to diagnose cancers based on scans in ways that doctors can't do that today. They want to build software for hospitals to organize their information in better ways. And so this is a huge area of growth for Google, but if they're not careful, they might get backlash.
Well, help me on this, Garrett, because I understand they're not trying to advertise to patients of Ascension. Okay, let's just accept that. But if they, in fact, did use that information to build new algorithms that would cure cancer, which sounds like a good idea, Would that be appropriate use of the data? I mean, if I haven't given consent for my data to be used that way?
So they say they're not doing that in this case, but they did sign a deal with the Mayo Clinic a few months ago, which is a long-term study where they actually are de-identifying the data, or they say they are, and they're pulling names out of it, and they are using it for AI research. And so the question is, if I'm a patient and my data gets used by Google to build something very valuable, and then they go and sell that and make a bunch of money elsewhere, should I have signed off on that at some point? What are my rights? Google's following the law, but there is a question of maybe they should go even further in letting people know what's going on.
So, Garrett, stay with us because we want to go to another aspect of Google and data, because it's not just health data that Google wants to handle, it's also your checking account. And here with that story is Jenny Serrain. So we heard this story this morning, at least when I got on the train this morning, I found out Google wants to do my checking for me.
Yeah, I think it's it's a little bit of a nuance. So Google basically wants to be the home for all things financial services. They have Google Pay, which is one of their many, many apps. And so inside the Google Pay app, you'll start to see checking accounts offered from many different banks. So the two banks that they announced initial partnerships with are Citigroup, one of the biggest banks in America, and then a smaller credit union out in California. And so I think it's not curing cancer, but it is, a different take in terms of they just really want to be the home for all things financial services. And this is just another way for them to kind of collect that data and build out better and better products around it.
Yeah, so as I understand it, if I were to sign up for this, the checking account actually would not be with Google. It would be with, for example, Citi, if I went that option. And so does that get them around any regulatory issues? Because Citi's got all the regulatory responsibility.
Yeah, that's exactly right. The all of the compliance, the account actually sits with Citi, and it's a Citi account. It's not going to be branded as a Google account. Citi, I think it will be something that is separate from, the Citi account that you can go in and get at a branch, or that you can go on Citi's mobile app and get. It's going to have some of the bells and whistles that's associated with working with a giant tech company like Google. But that's exactly right. I think banks are less and less hesitant to ever give up any control over the kind of anti-money laundering, know your customer laws. They always want to make sure that function sits wholly with them.
What's in it for Google?
I think it's like more eyeballs in their product. It'll be interesting to kind of see how it takes off. Like checking accounts are not the, sexiest part of financial services. So more eyeballs in the Google Pay app, which has been slower to be adopted here in the U.S. than in other parts of the world. Maybe this gives it the lifts that it needs.
Will they have access to the data of exactly whom I'm writing my checks to?
Well, it's something that remains to be seen. So Citigroup in their statement today said that they really value privacy and transparency. So, and they're still, it's actually, this is something that's still just being explored. They haven't even come up with some of the, what are the perks that are going to be a part of the account. So there's a lot that this still has to decide. It's not available until next year, right? Isn't that right? What I read? Exactly. 2020 is when they're targeting.
Yeah. So let's come back to Garrett here on this subject, because there's a lot of data, whether it's my financial data or whether it's my health data. And I understand they say we'll take care of it, we'll use it for some purposes, not others. Tech in general has not had a great track record on knowing exactly how the data is being used, who has access to it, and things like that. Why should we believe them?
I don't think anyone has really had a great track record. If you think, name any Fortune 100 company, and they've probably had some major leak in the last couple of years. I think, a lot of people feel that these tech companies are going to be putting your data in their clouds, whether you're doing a deal directly with them or not, right? Many of the retailers that we shop from every day, even the banks that we bank with, store their data in a cloud run by Google or Microsoft or Amazon. And so the argument from the tech company side is, look, we're the world pros when it comes to this, and maybe you can't make anything 100% secure, but we're the best in the business at doing that. And so that's kind of their pitch.
Best in the business at handling data, but keeping it private and using it for the right purposes, Jenny? That's the question.
Yeah, I think it's interesting. One of the things that was, made very clear to us today was the idea that this is not going to be something, at least in the checking account data, for instance, it's not going to be Google saying, hey, we know all your hospital data, we know all your search data. Based on all this stuff we know about you, you should apply for this credit card. It's really just going to be one, the Citi option is just going to be on a long menu of options that people can choose from. And I think that's an important distinction, that they're really letting it be consumers making the choice and kind of electing to give up whatever data it is they would like to give up.
Okay. Thank you so much. That's Jenny Serrain and Garrett DeVink reporting on Google and all the data that they want. That does it for Balance of Power today. Next, coming up with Business Week, we're going to have Jason Kelly, of course. He's at the 9/11 Museum. He's going to be broadcasting live from there. Meantime, this is David Weston, this is Balance of Power, and we're on Bloomberg Radio.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
My mummy is great because she helps pack my school bag. My mummy makes me yummy lunches and makes food for firefighters and busy worker people. My daddy is always there after school. He's the bestest.
At McDonald's, we know your world revolves around your kids. That's why our shifts revolve around you. To find out more about joining us, search McDonald's Jobs. Flexible hours. Made at McDonald's.
It's one small step for man, one giant shop. Sorry, 2 giant shops a month at 10% off with the new Tesco Club Card Plus. Oh, and double data from Tesco Mobile, all for $7.99 every month.
New Tesco Club Card Plus. Value you can't stop talking about. Subscribe online today. £200 max spend per shop, in-store spend only, club card app required, exclusions apply, double data only on pay monthly, home from home destinations. First payment payable up front, subject to status, see online for details.
What if, instead of browsing the World Wide Web, we were all browsing GopherNet?
Gopher is easy to navigate and easy to browse.
Because in the early 90s,
Gopher was taking off faster.
Until they made one crucial mistake.
At that point, Gopher traffic on the internet dropped off.
Find out why open source won the battle for the internet next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio. This is Bloomberg Business Week.
The fiscal stimulus, at least for now, at least this year, is having an impact.
Insight from the reporters and editors who bring you America's most trusted business magazine.
I think if Nike is going to continue to do what it does, Adidas is going to have a problem.
Plus, global business, finance, and tech news as it happens.
The belief is that Amazon is going to be even more muscular and powerful.
If we're going to get a correction, it's going to happen right here and now.
Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Welcome to the Wednesday edition of the program, 2 p.m. on Wall Street. This is Bloomberg Business Week. Carol Masser is in London, and Jason Kelly is at the 9/11 Memorial and Museum. We'll be joining him at the bottom of the hour for the 9/11 Memorial and Museum Summit on Security. I'm Doug Krisner at the Bloomberg Interactive Broker Studio in New York. Want to get you caught up on market action. It is brought to you by Commonwealth Financial Network. For the 6th straight time, J.D. Power ranks Commonwealth number 1 in independent advisor satisfaction among financial investment firms. You can visit commonwealth.com to learn more. Well, the equity market's really been kind of bouncing around all-time highs. Earlier in the day, we had Fed Chair Jay Powell saying the Fed's current stance on monetary policy is likely to be sufficient, provided, here's the caveat, the U.S. economy stays on track. He did, though, to be fair, warn of noteworthy risk remaining. I guess you want to read into that, the U.S.-China trade war. We had a reading on October retail inflation, kind of a mixed bag here. Headline CPI above forecast. However, the core rate was on a year-over-year basis short of consensus, but then when you compare it month over month, it was kind of in line with forecast. U.S. 10-year Treasury right now down more than 6 basis points in yield. We're at 1.87 on the 10-year. And in the equity market, we've got the Dow Industrial Average holding on to a gain of just 1%. S&P 500 down about 0.1%. And the NASDAQ Composite is weaker by about 0.3%. Want to bring in my colleagues this half hour from the Bloomberg Interactive Broker Studio. I have Bloomberg News Global Macro Strategist Vince Signorella here, along with Bloomberg News Stocks Editor Dave Wilson. Dave, let me begin with you. What are you seeing right now in this equity market in terms of noteworthy action?
You got to look at Walt Disney. I mean, it really does jump out, if only because, I mean, you think about the way that things have been going the last few months for a lot of companies. It's been like, you got to show us a path to profitability. That's what investors have, in essence, been saying when it comes to the reaction to quarterly results. And so you get Disney, which, I mean, they're spending $1 billion next year on programming for this new service called Disney Plus, streaming video. And they don't expect to make money for a few years. And yet, you get a number like you got out of Disney in terms of the initial signups of subscribers, 10 million. And it was just yesterday that this service was introduced in the U.S. and Canada. And Disney shares really taking off in response to the response, in essence, that it's getting. They're up more than 5%, biggest gain in the S&P 500. So that's certainly a stock that stands out in a big way in today's trading.
Okay, so that's on the positive side. The negative, market coming well off the best levels of the day. Vince Signorella's here. What do you think is happening?
Yeah, I just saw breaking news, Dow Jones reporting that the U.S.-China trade talks have hit a snag over farm purchases. So we were up well over 100 in the Dow Jones when I left my desk, and now we're coming in here, and looks like we're up only about 14 points at the moment.
There's still, as we walk up to whether or not we're going to get a partial deal is anyone's guess at this point. The two sides have yet to announce a new location, to seal an agreement, if there is one. The center of this issue right now seems to be tariffs, right? Whether or not we're going to get any existing levies as part of phase one pulled off, or whether the U.S. would outright cancel the tariffs that are expected to take effect on the 15th, right?
Yeah, and I think this is actually quite significant because the ag purchases were thought to be the layup, the easy part of this trade deal. And if they're hitting a snag on farm purchases, on the ag products, suggests we're far, far away from getting anything done on intellectual technology, et cetera.
Doesn't it strike you as surprising? We know what the situation with the food supply in China is. I mean, they've got the African swine fever that's decimated the hog herds. They're really clamoring for U.S. soy. They haven't been able to get that. We thought they were working toward that right now. But what do you think is do you think this is the China side pushing back because they sense some vulnerability here, or what?
That had been the case last week, and I don't know if it's still the case. And what China has been doing is securing additional trade deals with other countries, sort of bypassing the U.S. They announced today some progress made with a trade deal with Brazil. They'll be visiting Brazil shortly, President Xi. And it just looks as if they're basically trying to put up to Trump that they're not in a position to be bullied. They won't be bullied. And they're going to make trade deals with other nations to get the supplies they need.
So consistent with what you're pointing out earlier in terms of risk off right now, much stronger Japanese yen, 108.70. The offshore Chinese yuan is down about 0.2% against the dollar, 7.0335. So this is also showing up in the currency market too. The dollar, though, remarkably is still strong.
Well, when you get that risk off move, emerging markets dive, and that kind of buoys the dollar. It's pretty much an algo machine trade, whether you like it or not. It's out there.
But the dollar's holding up in the face of long rates coming in today. I mean, the 10-year's down 6 basis points. How do you make sense of that?
There was actually, when you see that good demand, good asset demand for U.S. assets, sometimes that props the dollar up as well. So it's not always just an interest rate story.
Dave Wilson, before I let you go, there were a couple of other interesting stories in the equity market, Canada Goose being one of them. As long as we're talking about Asia here, I mean, I know that on the call, one of the things that they were troubled by, the company Canada Goose, talking about the situation in Hong Kong, but it seems like more broadly, Asia represents some struggle for them right now.
It does, and they're talking about how wholesale their business is not going to be as good this quarter as they had been anticipating. So, Canada Goose is really taking a hit. We're talking about high-end coats, definitely a luxury type of item. And we've seen, some mixed results from the luxury goods makers over the course of, the latest earnings season. And Canada Goose trading in the U.S. is down 12.7% at this moment. And since you guys were just talking about interest rates, I guess got to jump in because it is really sort of on the one hand, on the other hand going on in stocks right now. On the one hand, you see energy, raw materials taking a hit. Presumably, at least some of that is trade related. And on the other hand, it's the bond proxies. It's the kinds of shares you buy for their dividend yields. Utilities and real estate and makers of consumer staples, food, beverage, tobacco. I mean, they're holding up the market, no question. Utilities index among the 11 main industry groups in the S&P 500 has the biggest gain. It's up 1.5%. So you really do have a back and